I am ready to go. I hope you guys are too. Had some big news at 8:30. Created a little bump and a spike in the market, guys. Checking news every morning, right? Everybody's been caught at least once, I think. I'm not sure I know anybody that hasn't forgotten to check at least one time in their life. Guys, I check it every morning not because I am worried about what they're saying. Just I don't want to get caught in the reaction. That's all it is. When I see there's big 8:30 news, I usually go cook breakfast or something, come back a minute or two after. And a lot of times there's fantastic moves after news. It's what it takes to get things going. So at 9:15, we do have medium impact industrial production. At 10 a.m., we do have high impact. So guys, I don't tell you what to do. That's not my place. But there's a good chance that there will be some sort of emotional reaction from the people with a lot of money in their pockets at both 9:15 and 10 a.m. Me personally, I choose to do something other than trade. Because I have an Apex account, they suggest, actually, they demand that I not trade during news. So if that's the route you're taking, make sure you understand the rules as well. Every day we talk about the same thing, guys. Small class today. I believe we call this an intimate gathering. Nice to have you guys here. Um, Same thing every day, right? We talk about rules. We talk about advantages. We talk about getting in and out of the market. And I want to show you one of the things that happens through repetition. One of the things that happens when you build trust. And I hate it when this happens to me, but it does. I took a trade today. It fit my rules. Everything was exactly what it needed to be. And guys, I lost. I lost my first trade of the day. Um, and then I won the second day and or the second trade. And this is kind of what trading is. And I just want to share this with you guys that are new to trading. You will take losses. And the real question is, do you trust your rules enough to take the next trade when the rules are met? And that's what we work on in this classroom. We work on it through repetition, through a lot of picture taking. We work on it through asking questions and getting feedback. But you'll notice that it's almost the same look. One going up, one going down, coming from termination conditions. This one didn't work. They actually stopped me out, and then the jerks ran right to my target, but that's okay. They gave me my rules met again, and I was able to end up about 250 from two trades. Not a bad way to make a living, guys. So we're going to talk a lot about just building trust and understanding when advantages are present and maybe when they're not. And everything that I talk about is coming from this tutorial section, guys, straight off the education page. Every rule that you need, every look that you could want, it's all right here. I also want to go to the glossary of common terms. There's a lot in here. Just scroll through it this weekend. Click on every link and understand some of the language in here. I've been getting a lot of questions lately from people that have been with me for a while. Hey, Mark, what's that? What's this? What's that? This is a great way to get a lot of answers just about stuff going on. One-to-ones, small swing one-to-ones, divergence. Divergence is one of those things. And then Lyle, I think he already left. This lets you know that the negative number will plot when it's true. It was a pretty cool lesson there. So go through and click on those a little bit. I think you'll be surprised at how often you see things that you've heard in class and you were wondering what was going on. And then the rules that we talk about today, and really every day for the first hour, will come from the tutorial section, guys. There really is no secrets with what we do. I don't try to hide anything from you. I don't try to give you a little bit of information and then make you do some song and dance for the rest of it. I really want you guys to be 100% proficient. Actually, I want you to be so proficient that eventually you just fire me and you don't have to show up anymore because you're so stinking good at this. Maybe you just show up because you love the awkward sound of my voice. But the first thing that we do, good morning, Luciano. Each and every day, guys, as we talk about a high probability trend trade, and this is a trade where each indicator on every chart agrees for the trade. And you know, sometimes I look at the names in here and I'm thinking to myself, do I really need to say that? Do I really need to go through and say this is a trade that wins more than it loses? This is a trade that creates confidence through the memory of success. And it dawns on me every morning that absolutely I do, because guys, repetition is key, whether it's hearing the same thing, seeing the same thing. Sometimes even if it's feeling the same thing, feeling the sting of breaking your rules and losing that money, whether it's simulated or real, all of that's important in the growth process. So we talk about this high probability trend trade, guys, because this is the most important part of the growth process. Learning to read your charts, just being able to look at your chart and go, man, I've seen this before. I know what may happen. And I'm going to say that again. I know what may happen based on the pattern. Guys, I never know what's going to happen in the market. Hey, JW. To be completely 100% transparent and honest, I never know what's going to happen. I don't know if it's going to go up. I don't know if it's going to go down. I don't know if I'm going to win. I don't know if I'm going to lose. I have taken the pressure off of myself of hoping to be right. And I've put the pressure on myself to focusing on having advantages, seeing a pattern that has been proven, seeing a pattern that is repeatable, seeing a pattern that can be back tested. And when the pattern presents itself, I know that it provides a statistical advantage. That's when I trade. There was a chart this morning that says I knew where it was going. Um, and I'm just going to warn you guys, be careful of that arrogance, because you don't. You know where it may go. You know where it may stop, but you never know 100%, guys. So you trade with the advantages in place to increase the likelihood of it going where you think it's going to go, and that's what chart reading does for you. And in the same breath, that the person that put they knew where it was going, their chart read said that it was way more likely to go down than up, that everything was agreeing with the direction. So he was willing to take a shot at it. So chart reading, 90% of the day, maybe 95. Chart reading is sitting on your butt and doing nothing, waiting for indicators to tell you that it's time to get into the market. When you get comfortable with your chart reading, you will understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And this is the basis for trade entry and management. I've never seen that at the end of there. Your chart reads, you're likely to continue spots. Guys, these are going to be your entries for the highest probability trend trade. Where it's likely to go is a great place to take profits. And where it's likely to stop is an awesome place to no longer take trades. Don't trade into areas that are likely to stop the market. Notice that it doesn't say areas that will definitively stop the market, because areas break all day long. Your chart reading is going to allow you to understand when it's likely to break, when it's likely to hold. So we're going to focus on chart reading for the first hour, and specifically trade entry precision. I don't cover a lot of management in the first hour, not after the entry, but I can tell you that the advantages that you're going to learn to recognize as high probability trend trade, that's the beginning of your management plan, is having the advantages in place to take the trade, because the market puts itself in a position where it's likely to do what you expect it to do. So we're going to focus a lot on learning the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to go over the looks, the advantages, where you find them, what they mean to you as a trader. Guys, simulate, practice, break some eggs, make some mistakes. I want to see what you're doing, and that's it. Post pictures in class, guys. If you look at your chart, and this is for my newer folks, right? Zorro, if you look at a chart and you're like, what does this mean? Take a picture of it, drop it in the room, and write on the chart, Mark, what does this mean? Draw an arrow to it. If you take a trade, win, lose, or draw, I want to see it. And what I'm going to do is I'm going to give you feedback on everything, guys. We're going to discuss advantages. We're going to discuss disadvantages. So I need you to tell me what it is that you see on the chart, because the goal is to make you guys chart readers. If you just put a picture in and you don't tell me anything at all, well, then I'm just going to do my chart read. And then you're going to start typing in the room, but wait, I thought this, but wait, I saw that. Just type it on the chart, guys. It makes it easier. The goal is that you don't practice the wrong trades, that you don't create this muscle memory of getting lucky rather than repeating patterns that provide an advantage. We're going to simplify heavily today, guys. We're going to talk about a high probability trend trade first and foremost. We're going to keep it very focused on one trade that has three advantages. You're going to hear me say 1,000 times a day, take pictures. Take pictures. Take pictures of your rules being met. Take pictures of the trades that you take. Take pictures of things that you don't understand and annotate those charts. Because the more pictures that you take, the easier the looks become. Gary, yes. ES, no, not ES. CL has rolled over, but at last check, the volume was lower on 0504. If you scroll up to the top, I put that in there for you guys. The volume's higher on 4 than it was 5, but I rolled over to 5 because I don't trade in class. I don't really trade crude oil, and the patterns are just the patterns. So we're going to focus on patterns and advantages. I can, JW, give me just 1 second. It's in the software user guide. If you want to go look before I show you the link, in the software user guide, right off the education page, you'll find something to put in that trade analyzer. But I'm happy to do it. Just let me get through my little spiel here real quick. I encourage new users. I encourage old users, take at least 15 pictures a day, guys. Take at least 15 pictures and annotate them, write on them, vandalize them. What's kind of cool is that if you take a picture of strong triggers and you write on that picture, strong triggers give me momentum, and you do that 20 times, you begin to believe it. And if you take 20 pictures of a termination condition and you say termination conditions may reverse the market, you begin to believe it. And what it does is it solidifies and reinforces what you're looking for. And it makes it easy to catch it in the live market because you've got that repetition. So your path to getting where you want to be, ASAFP, guys, is post in the room. Just don't even hesitate. Use up as much time as you're able. Give me pictures of what you're doing. I'm not going to judge you on your trades. I'm going to judge the advantages on your chart, and we're going to talk about it. And if you could have had a better entry, we're going to talk about your better entry. And if you could have had less risk or more profit and all those things, you've already taken 19 picks, Gary. That's awesome. And then the second thing is using your spreadsheet, guys. Nexgen provides you the spreadsheet. It's in your Nexgen Study Picks folder. There's a downloadable version right off of the tutorial section. Every day I drop mine in the room for you. So I just dropped mine in the room for you. Steal it. I'm cool with that. But your first page on this spreadsheet is just trade tracking. And this trade tracking, this is your trade journal. Guys, even the CME says have a trade journal. Track your progress. But people, for whatever reason, ignore this one. They're like, it feels like a lot of work for $1 million a year, right? Feels like a lot of work to add another $50, $60, $70, $80, $90,000 a year to my income. I don't really want to take pictures and put it in a spreadsheet. And guys, you're going to get exactly what you put into this. So the more you put in, the quicker you're going to get to where you want to be. This is going to allow you to talk about how you felt and what you saw and your conditions and whether your rules were met. But I think the most important part is this right here, guys. Your notes section is your feedback from class. So every time you post in the room, we're going to talk about it. We had an awesome little conversation yesterday about just a simple chart read. And then I encourage that person to go back to re-annotate their charts, to write the lessons in there, to put it in their notes section. Because every morning you're going to study what you did yesterday. Every morning you're going to find these things that were bringing you success, these things that were taking that success away from you. And it's going to get you focused. It's going to get you focused on the best of the best, but it's also going to get you focused on avoiding the problems. So if you post this one in the room, and so Ron C., I'm going to put you on the stand. Ron C. dropped this into the room. And he said, Mark, I had a good top. I had a termination. It reversed the market. And I had the best momentum ever. And this is the kind of momentum that I get kind of giddy about. And he's like, but Mark, look at my trade. I lost. I had every advantage I could ever hope for, and I lost the trade. And I'm going to go, Ron, dude, You traded directly into Fibonacci support. It was acting as a termination condition. And I said this yesterday, and I'll say it again, is you'll learn to trust your rules so much that you won't be surprised when you take a loser when you break them. So much so, hopefully, that you try not to break them, that you allow yourself to have two options. Either your rules are met or your rules are not. So if you go through booing and hooing. If you go through and you look at what you did yesterday, and it says traded into termination conditions, lost money, or traded with a 50-50 with divergence and lost money 2 or 3 times, what you've done is you've said, man, I got to watch out for this. This is a pattern that's kicking my butt. I'm going to try to avoid it. Maybe you write a note on your paper. Maybe you put a sticky note on your monitor. But what it does is it prepares you for the day, and it will accelerate your learning, guys, 100%. I know because I've been there. I'm not just the hair club president, guys. I'm also a member. I started right where you're at. I started at ground zero about 3.5 years ago, 3 years ago, actually. Almost to the day. I think I was healing up from spine surgery. And I started out and I didn't know what a trigger line was, and I didn't know what Fibonacci was, and I didn't know what divergence was, guys. And my brother gave me this awesome path. He goes, hey, Mark, you want it to be easy? Do this. And of course I didn't, and I lost a lot of money really fast. So I'm gonna keep it easy for you guys. Hey, Zorro, are you comfortable taking pictures of both charts? Because I think before we go any further, we should probably go through that process of getting 2 charts, because the trades that we teach require a large chart and a small chart. And if you want to get the most out of this classroom, Zorro, I need to see both. I need to see what you're doing on both charts. I love this trade, by the way, so that I can make sure that the advantages are there, so we can talk about the chart read. You clearly have an awesome grasp on what you're doing. I've seen this trade twice from you so far. I think we found your thing. But if you give me both charts, if you give me your large chart and your small chart, I'm going to give you the best possible feedback. It helps me help you, without a doubt. And again, there's one chart again, right? It's awesome. Great gold trade. What did your large chart say? Was your large chart in determination conditions? Why did you take the entry where you took it? And guys, this is where I'm going with this. And I'm going to go ahead and I'm going to go through the whys here. We're going to go a little long here. I've got 2 charts. So I'm going to pull up my capture software. I'm going to pull up my Snagit, and I'm going to go from the top left to the bottom right, understanding fully that if I post in the room, I'm asking for feedback. So what I have to do is I have to let you know what I'm thinking. So I'm going to use arrows, guys, and I'm going to start talking about the advantages that I see. I'm going to talk about strong triggers, and I'm going to point, and I'm going to say didn't reach the area. And now what I'm doing is I'm saying, hey, Mark, this was my chart read. And then I'm going to talk to you about your chart read. And then you're going to do something clever, like say, took the pullback at an area inside of triggers. And what you've done is you've written your rules on the chart. You've made this repeatable now. You know exactly what you did. You know why you did it. You know where you did it. And you've created an awareness of the patterns that are bringing you success, guys. And then just take it. You can right-click and hit copy. On capture, you can hit copy. But now what you've done is you've given me the best of the best. You've given me the greatest information. And if I omit my large chart, guys, I don't know. Did you reach a termination condition? Was there a pivot stop out? Did you hit 1-to-1s? Did you just get lucky? Or did you take a trade that made sense? And this is the biggest thing, guys, is I'm not afraid to tell you if you got lucky, but luck is a horrible recipe for long-term success. It really is. And the same thing here. If you go short here and you don't show me the large chart, well, then I can't tell you that your triggers are weak. So guys, the only thing that I want to do is help you. So give me the information. Please, please, please. Tell me what you see. Tell me why you did what you did. Tell me where you entered and why you took the entry there. And tell me where you exited and why you took the exit there. Feels like a lot of work, right? But the reality is, guys, this is your recipe for getting to where you want to be. You're welcome to skip it if you like. High probability trend trade, ladies and gentlemen. 3 rules. That's it. Each rule creates an advantage. It's the 3 advantages that create a trade. A trade isn't hoping that it goes down or up. A trade isn't having a gut feeling. A trade is it's just momentum, a clear path, and an entry area for the brand new user. These 3 rules provide the 3 advantages. The 3 advantages are the recipe for a trade. Holy smokes. Sorry about that, guys. I mean, that was... All right, close your eyes. I don't want anybody to get dizzy. Here we go. My mouse went nuts there. I don't know how to turn that off. Momentum, clear path, and an entry area. Rule 1 gives you momentum. Rule 2 gives you no terminations, clear path. Rule 3 gives you the entry area. These 3 rules happen on only 2 charts. One of the reasons, again, why I'm so adamant about showing me both charts. Large chart, the most current bar. Don't skip the course directions. Yeah, I mean, the reality is you're all grown-ups, right? Everybody can do what they want to do, guys. You can choose to fight me. You can go with me. You can follow rules. You can break rules. You can make it easy. You can make it hard. It's entirely up to you. I have never paid child support for one of you, so I'm just going to teach you how to read indicators. But I'll tell you, the course directions have been put together over 27 years. 27 years Nexgen's been teaching people to day trade, and for 27 years we've seen the exact same patterns. You either allow it to be easy or you decide you're going to be smart. Totally up to you. Large chart leads the way, guys. Large chart's a broad stroke of a brush. It's a slow moving chart. It doesn't show you rapid change in the market. But on the most current bar, the large chart, you will understand direction, momentum, and areas. You're going to have a boatload of information from one bar on this slow-moving chart. And this slow-moving chart shows the overall opinion of the market. It shows you what the people in charge, the large crowd, wants to have happen. Guys, if the guys with money say we're going up, it's going up. And if the guys with money say it's going up with momentum, it's going to be hard to stop. And if the guys with money haven't reached a key area where they're either going to take profits or add on, guys, it's probably going to continue. So I trade with a large crowd. That's my job. My job is to never fight the large chart. Once the large chart gives me momentum and a clear path, rule 1 and 2, that's where we embrace the small crowd, guys. This is a group of yahoos. I don't know, they've probably been drinking, but they love to fight the large crowd. And what they do is they create these little shoves. When these guys are like, we're going up, these guys are like, fight the system, we're going down. And they give these little snapbacks. And guys, you are going to take advantage of those. You're going to be able to enter the market on those little retracements. This refinement tool, the smaller, faster chart, is going to allow you to reduce risk. It's going to allow you to maximize your profit potential. We are literally going to dissect one bar from the large chart into about 30 bars on the small chart, and it's going to have you buying low and selling high. Your risk is going to be minimal. Your profit potential is going to be maximum, and that's where Rule 3 comes in. That's where Rule 3 really sets us apart. So rule number 1 says that I must have strong triggers on the large chart. That's going to provide me momentum. I can only have strong triggers if all the colors match. That's about the easiest way I know how to make it. If the large chart is green, it's going up. If the large chart is red, it's going down. If I never fight that direction, I never fight the large crowd. That's a pretty wonderful way to work. In order to have strong triggers, everything's going to match. So when the background is green, the small triggers, those solid lines, and the large triggers, those dashed lines, should be green. They should be wide. They should be angled in the direction of the trend. If they are one green, one red, I don't have odds favorable. I don't have strong triggers. If it's, smaller red, larger green, I don't have strong triggers. It just hasn't happened yet. You have strong triggers when both are green, when both are wide. And then the space is created between the two. And guys, it's not a difficult um, rule to recognize. It's not a difficult one to understand, but you got to wait a little bit. So I want you to think about scissors opening up. And when scissors open, you have the ability to cut. So to the uptrend, smalls above the large, space between the two, the odds are favorable for the market to continue up. In a downtrend, smalls below the large, both are wide, both are angled in the direction of the trend, space between the two, the scissors are open, the odds are favorable for the market to continue down. When you have this odds favorable momentum, you're going to hear that in the room all day long, to the upside, you're going to buy Fibonacci support on a smaller, faster chart. When you have odds favorable momentum to the downside, you're going to sell Fibonacci resistance on a smaller, faster chart. Strong triggers push a trend. Strong triggers break areas. Strong triggers even cover mistakes sometimes. But you've got to commit to the strength, because the more the scissors close, the less advantage you have. So odds favorable momentum, strong trigger lines, that's the best of the best, guys. That's when we're selling Fibonacci resistance all willy-nilly. And with both triggers down and one line inside, this is the first sign that momentum is slowing. This is the first sign that your rule is on its way to not being true. This is the first sign that areas may not break, that it may not continue in the direction of the trend. You can still take short trades, but everything's got to agree, guys. Let it be perfect, because you're losing an advantage. And then when the smalls work their way inside of the large triggers, you have a weakening or a slowing of the trend, and anything can happen up or down. I am a very big fan of language, and I think that if you speak to yourself when you look at the chart, I have odds favorable momentum. Guys, that instills confidence. And the flip side is I have anything can happen triggers. It doesn't sound like the look that you want to bet your college tuition on. So strong triggers versus weak triggers, guys. As a brand new user, commit to strength. It's going to create confidence, and eventually you'll get to the point to where maybe you do find these next level trades. And then when weak triggers reach an area, the area is more likely to hold. It's more likely to stop and reverse that market. And that's rule number 2. Rule number 2 says don't trade into termination conditions. Don't trade into likely to stop areas, because the reality is, once again, is you don't know whether they're going to hold or whether they're going to break. The large crowd knows whether or not they're going to react to it, but they don't send out a memo, guys. So when termination conditions are false, you're going to have room to your targets. This means you have a clear path, and essentially you're on the highway. There's nothing in the way, and you're just cranking with all that momentum. It's going to be hard to stop you. Your large chart has already defined direction. The background is green. And your large chart has already defined momentum. The scissors are open. So now we're going to look for the areas that may reverse the market. We're going to look for the areas that may cause a bounce, may create a fight. They may reverse it completely. And the reality is you're just not sure which it's going to be. So termination conditions are Fibonacci-based indicators that may reverse the market. This is based on a comparison of the Fibonacci areas and the T3 strength and location, the trigger line strength and location. We're going to look at blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low line, and magenta divergence high line, mid-band if the large triggers are a full bar away. And let you guys in on a cool little secret. Is you don't have to know how these lines are created. You don't have to know the mathematics that go into it. You don't even have to be able to spell Fibonacci. But these lines are going to let you know where decisions are being made, and these lines can cause trouble to the small trader. So we're going to use the trigger lines, and they're going to let us know if the lines are likely to stop the market, if the lines have the potential to break, or if the lines have broken. And I'm dropping this picture in the room for you. This is what everything looks like. Red resistance, blue support. Divergence low is a cyan line. That means light blue. Magenta line up top is a divergence high. That's magenta is just like hot pink for you 80s kids. Yellow 1-to-1s. And there's a simple recipe to understanding whether or not these areas are likely to hold or likely to break. And it all starts with price reaching the area. Let your dynamic Renko bars get to the area, because if decisions are being made at fibs, mid-bands, 1-to-1s, divergence highs, divergence lows, well, then the market has to get there to set off that decision-making process. So after price reaches any Fibonacci support, check your trigger lines. If they're not below the support, don't take any more trend trade shorts on the small chart. It's simple, right? If you reach an area and the triggers are above it, don't take any shorts. You don't have a clear path. It may bounce, it may reverse. There might be like a day-long fight there. You never know. But once price gets there, the triggers remain above. Sit on your hands and wait. Same thing up top. Price got to support, triggers remained above. Sit on your hands and wait. Strong triggers can break areas, but the area isn't considered broken until your small triggers and your large triggers get below the area in question. Once they do, you'll notice that support begins to behave as resistance. You'll also notice that at the bottom of this bar, it hasn't reached Fibonacci support. So price clears the area. The path is now clear. You can see the odds favorable momentum. And guys, that tail, that's that small chart pullback. That's you selling resistance with all that momentum and a clear path to get to the next area. So two options for the brand new user, guys. It's either broken or it's not. You either have a clear path or you don't. Life is either easy or you're making difficult on yourself. So no triggers through, not a clear path. Small and large, the area is broken. The path is now clear until you reach the next area. And I'm going to take just the two pictures, and I'm going to take the question off of there, because I think you don't even have to ask yourself what it would be like if you never traded in determination conditions. Of course, life would be easier. So is everybody cool with the very simple recipe? No triggers, no trade, both triggers, let's look for rules to be met. Well, there's one more look, and this is going to be your medium probability trade. This is going to be the first trade that you take where these areas have the potential to break. And you're going to see it when your small triggers smash through the area. 2 or 3 points worth of distance beyond the area in question. 50% of your triggers have smoked through the area. And here's the key to it. With odds favorable momentum. So I'm going to put that right in the gap between the small and the large. But 50% of your triggers have remained above. Guess what we call this trade? This is your first medium probability trade, and that's a 50-50 trade. And it means with momentum, the area has the, let me go all caps for you, potential to break. It is not broken. And guys, this is a very key concept because we're working off of 3 advantages. We're working off of momentum. We're working off of a clear path, and we're working off of entry rules being met. And this 50-50 trade means that you just forfeited 33.3% of your advantages, which means that it's no longer high probability, which means that everything needs to be perfect. You need to make sure on other charts that you're not forfeiting momentum. You need to make sure that it is coming from a termination condition. And I'm going to give you a very solid plan for the 50-50. This is one of the most common trades, but this is also one of the most lost trades because people get excited believing that the momentum owes them a win. I'm going to give you the best case scenario to take it. But before we do that, we're going to focus on termination conditions just a little bit more. I said earlier that 90% of your day is going to be waiting for these advantages to come into place. 90% of your day is chart reading. And this kind of shows it a little bit. The triggers are gaining strength, the trend is up, life is good, and it smacks into Fibonacci resistance. When it does, each and every one of you in this room just asks yourself, hey, where are my trigger lines? And you'll notice that they remain below. This is your giant red flag that says don't go long. This is an area that may stop the market. This is where the sellers may take over, the buyers may jump ship, and decisions are being made. It keeps you safe because look at the push right off of resistance. We also had divergence. Divergence is a loss of momentum. When that negative number prints, when that magenta line starts sliding off to the right, this means that the sellers stole the momentum from the buyers. We don't know that this divergence is true until about the third bar down. So it's just a termination condition because of the fib. And then we know that it's a termination condition and there was a loss of momentum. But this divergence high doesn't become a termination condition until price reaches the area. There's that magic recipe. So from resistance, it pushes to support. And when it gets to support, the triggers are above. No short trades. The large triggers are a full bar away. We call this the gap theory. If there's room for an entire bar to get back to those large triggers, there is no way on God's green earth I'm trying to short trade here in the middle. It acts like a vacuum. You'll see this at mid bands, you'll see this at fibs, you'll see this at 1-to-1s. And all it says is be a little patient. Let's see what's going on. And then price reaches resistance, that divergence high, another resistance. And when price trades above a divergence line, then back below that magenta line, don't take any long trades. Says so right in the instructions. Don't take any long trades. If Fibonacci resistance is true, it adds power to the top. And what that means is that if fibs are working as a termination too, look at your triggers, and it's what we call a pivot stop out. Price moves above, back below. Guys, it is financial suicide to try a long there, to hope that a long works, to just wish that it would go up. And the cool thing is when this termination creates a full reversal. This is your recipe for a strong top. When a termination condition creates a full reversal of the market, large go from green to red, the smalls get below, and then it gives you that rules-based entry. Odds favorable momentum, haven't reached Fibonacci support yet, rules 1 and 2 are met, you guys are going to pinpoint where the top of that tail is most likely to form. That's you selling resistance on a smaller, faster chart. This trade is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. This is the trade that's easy to study. It's easy to prove or disprove if you're willing to do the work. And I'm going to teach you guys how to study that in just a little bit. But what we're going to do now is once again remind ourselves that no matter what we want to happen, it's better to trade rules than hope and wishing and wanting, because price reaches these yellow 1-to-1s and look at the bounce. Not one of you went short because you know that the path wasn't clear. It hits resistance and the triggers remain below, and not one of you went long because the path isn't clear. And your small and large were different colors, so not one of you went long because the momentum wasn't there. And then you had to sit on your hands and sweat feverishly for the next 45 minutes, just waiting for your freaking rules to be true. But eventually the termination creates the full reversal. It's now a strong bottom. And it gives us momentum. The small's outside of the large. And all my triggers have gotten above resistance, so my path is clear. And each and every one of you in this room, within, I would say, 2 weeks of being with me, we'll be able to pinpoint exactly where the market is most likely to continue. And this becomes your high probability trend trade, the one that typically wins 70 to 80% of the time. And it's what you don't do when there's nothing to do that's going to determine how much of that fantastic win you get to keep. Because I see this all the time. I'm going to try the short and I lose a lot of money. So if it won't go down, it's got to go up, and I lose a lot of money. Well, if it won't go up, then surely it's going down, and it takes my money again, and I get into this funk, and I start revenge trading, and I'm so freaking mad that by the time the perfect trade sets up, I'm so pissed off I miss it, and I'm just down 750. And guys, this is why we trade advantages, and this is why we focus on rules, and this is why chart reading is more important than really anything in the beginning. Is you've got to understand when you don't have that advantage. You have to be able to look at your indicators and say to yourself, it's okay to not take this short or long. I can sit on my hands because eventually it's going to give me exactly what I need. So Those are using lines for areas, guys. Lines on the large chart create problems. Lines on the large chart are where decisions are made. Lines on the large chart may stop the market, may reverse the market, may create an untradeable bounce. Sometimes the large chart turns from nowhere. Sometimes the large chart may have everything down. Notice the weak triggers, and then it goes up. Or it may have everything up even with momentum, and then it goes down. I'm going to give you guys a termination condition. This one happens on every time frame. Any chart, doesn't matter. Range chart, minute chart, month chart, year chart. 3 divergences in the same price range may terminate a trend. Because the entry chart is the fastest chart, you're going to see it here first. 3 divergences may terminate the trend. Notice there's that word may again. We don't speak in absolutes. We speak in terms of advantages. And when I have 3 divergences, my advantage of a clear path is gone. Rule number 2 isn't met. That becomes even more powerful when my small triggers work their way inside of the large triggers. Now I have anything can happen triggers, and I have 3 divergences. Even powerful, more powerful still, when the third pivot is higher than the previous from a low, or the third pivot is lower than the previous than a high, it creates a head and shoulders. So if I see 3 divergences, no more short trades, I don't have a clear path. Rule number 2 is not met. If I see 3 divergences and weak triggers, rule number 2 is not met. If I see 3 divergences and the third pivot's higher or lower, rule number 2 is not met. I don't have a clear path, guys, and no matter how much you want it to go, you don't have a clear path. And it's going to go every now and then just to keep you tricked, just to keep you breaking your rules. But you're going to see this at a low and this at a high when that large chart can't give you the information quick enough. And guys, I'm telling you right now, divergences on the small chart can create a push that pulls you right out of a trade. And that's going to be a big management tool for you as you grow with the software. If you are short and 3 divergences print, get out. If you're long and 3 divergences print, get out. It gives you that information on a smaller, faster chart to not sit there and wish the market would continue down, but rather to take profits, to make a couple bucks, to get out and wait for the next best trade. So large chart gave us momentum and a clear path. Large chart did this with 1 bar, guys. And please play along if you don't mind. Large chart tells us that the market is up. Large chart, the scissors are open. Large chart hasn't reached the area and we've cleared the previous. The rules are met. I have momentum. I have a clear path. Can everybody see that on the large chart? Because this is your look. We're committing this look to memory because this is the best look for a long trade. Once we have that look, we're going to go to the smaller, faster chart. We're going to go to the refinement chart. And we're going to use a limit order to buy or sell a pullback at areas inside of triggers. It's a lot of words, isn't it? We're going to use a limit order, meaning that you guys are going to wait for the market to come to you. You're going to use that limit order to buy or sell a pullback. A pullback is that little shove that the small crowd gives. And you're going to buy or sell that pullback at areas, fibs, midbands, yellow 1-to-1s. On the large chart, areas ruined our day. On the small chart, the areas get us into the market. It gives the market a place to bounce. But the key is that we want them inside of triggers. And for brand new users, I'm going to expand on that. And I'm going to say you want them inside of favorable large triggers. And favorable large triggers means that your large triggers and your synthetic triggers. Synthetic is a fancy way of saying from the large chart. Your large triggers, the smooth dashed, and the synthetic triggers, the step dash. They should be one on top of the other. They should be wide, angled in the direction of the trend. They should be as tight on top of one another as humanly possible, like 2 snakes riding piggyback. Because all triggers are moving averages. And price loves to correct back to the moving averages. So the triggers provide a correction point. When they're one on top of the other, the correction point is small. And when you put an area inside of it, you've got the least amount of space where the market is likely to continue. When the triggers are split or wide from one another or don't agree, your correction points grow exponentially. Your risk grows exponentially. Where it's going to correct from grows exponentially, which means that your advantage goes away and you may find yourself with an awful lot of risk on these trades. So for the brand new user, I encourage you guys, focus on having favorable large triggers, one on top of the other. And then again, as you grow with the software, you will understand when it's appropriate to maybe get outside of that, to have that split in the triggers and still take a shot. So large chart says up. Large chart is giving us everything we need for a trade. We're going to buy low. We're going to use the smaller, faster chart, and we're going to buy low. And if everything's set down, we're going to sell high. Guys, you've heard it for decades. Buy low, sell high. You just got the golden goose. You know exactly where low and high are likely to be. And because of the refinement process, taking the large chart advantages and turning them into 15 to 30 bars on the small chart, the bottom of this bar is the beginning of your pullback to an area. The top of this bar, this tail, should be resistance inside of favorable large triggers. This is how we reduce our risk, and this is how we maximize our profit potential. But there's a little order of operations, and you know what? Let's go through the whole thing real quick. This is on your spreadsheet that I gave you guys. It's in the upper left-hand corner of the client trades. When the large chart says up, most current bar, large chart says up, large chart has momentum, and even better, the large chart is coming from a termination that created a reversal, a strong bottom. Price has not reached resistance. Guys, this is rules 1 and 2 being met. This is the best of the best scenario for buying Fibonacci support on a smaller, faster chart. So I'm going to turn my attention to the right. I'm going to look for an entry. It's time to look for triggers. It's time to look for areas. Where does everything line up? And I am not going to worry about this silly little line on a smaller, faster chart because areas are defined on my large chart. I put this picture in here on purpose. Areas are defined on the large chart. We're hoping this guy gives us a bounce back to our entry. So we're going to wait for the small crowd to kick in, and hopefully they give us a reversal bar. You do not buy the reversal bar. The reversal bar signals the beginning of a pullback. I see it a lot with new users. They get in right here. Well, I got the reversal bar, Mark. My wife did that. We're not buying reversal bars. What we're doing is when the reversal bar prints, we're going to pinpoint where the market is most likely to continue. The triggers represent our correction points. So the first thing I do is I look for my triggers. I'm looking at the top line of the triggers, whether it's synthetic or large, to the bottom line of the triggers, whether it's synthetic or large, because I know that inside of this white box, I need to find something solid for the market to bounce off of. I need to find fibs, mid bands, yellow 1-to-1s. And once I see them, I'm going to create my window of opportunity. My window of opportunity is where the market is most likely to continue. The window of opportunity is the point where if all of this momentum in the clear path is going to win, that's where it should bounce. So my window of opportunity extends from the highest point of support to the lowest point of support, all caps, guys, inside of those trigger lines. And once I've defined it, I'm going to put a limit order. I'm going to wait for the market to come to me right at the top of that window. In my picture, I get all this done while the reversal bar is there. As a brand new user, it may come down a few bars while you're still running calculations. That's why we take so many pictures of the best of the best. And remember that activating this limit order is done because the large chart says that it's time to look for a trade. And then when you're going short, guys, it's the exact same process. You're going to wait for the reversal bar when the rules are met. You're going to look for your trigger lines because that's where the market is likely to continue. And then you're going to identify the areas inside of the trigger lines because it needs something to bounce off of. And once you do that, get that limit order in place, waiting for the market to come up to you. And if the small crowd has it in them and gets there, congratulations, you're in a short trade with every advantage, the trade that typically wins more than it loses. And all you're doing for 20 days is focusing on getting in at the right spot. So waiting for the reversal bar, it signals the pullback. Identify your trigger lines, there's that big red box, and then refine that down to the point where the market is most likely to continue. we put a limit order right at the top of that window because the large chart isn't giving any hints of wanting to come back. So we're hoping the small crowd gets us there. If there's areas beyond the correction point outside of the trigger lines, that's not a part of your window of opportunity. And then go in the other direction, it's the same thing. The reversal bar begins the pullback. I identify my trigger lines, and then I know that there has to be a bounce point inside of there. Guys, the areas inside of triggers act as like a brick wall that you're throwing a ball against, kicking a ball against, and it gives it something to bounce off of. Very often I see people getting in at the trigger lines, not the areas inside, and it increases risk, right? If I get in down here at the trigger lines, my risk is going to be more. My profit potential is going to go down. So 20 days learning to commit to the best of the best, learning to commit to the areas inside of triggers. And when you have the two charts, you can put it all together. And this is how you're going to study. And guys, this is such an important part of it. Coming into the weekend, you have the opportunity to go to every market on your NinjaTrader 8 to scroll back and circle every tail you see with odds favorable momentum. Circle every tail you see with odds favorable momentum. Don't even worry about the termination conditions yet. What I really want you to do is develop faith in the idea that momentum pushes a market. If that circle or square on your smaller, faster chart lines up with Fibonacci support inside of favorable large triggers, guys, you have a trade. You have the highest probability trend trade. And what you're doing is you're developing trust. You're developing recognition. You're getting to the point without any movement. So when the market is moving, it almost appears to move slower. For the brand new user, the easiest places to find these trades are on crude oil, on the S&P, on the Russell, where it flows a little better. And you'll use a 13.2 large chart, and you'll use a 5.1 small chart. A lot of you see me, you see John Novak, you see people in the other room trading the NASDAQ. Guys, the NASDAQ moves at about 5 or 6 times speed as crude oil or the S&P. The NASDAQ moves so fast that your large chart is a 34 and your small chart is the exact same chart that you use for a large chart on any other market. The NASDAQ is difficult to trade. The NASDAQ requires an understanding of your rules and being able to assess them in a matter of seconds. So learn your patterns on the easy ones and eventually you'll get to the NASDAQ. There's a lot of nuances that go with the NASDAQ as well, guys. And Gino, if it kills you every day, stop dating that girl that breaks your heart. Go let it be easy. And that's one of the things, guys. I don't know about you guys. My ego it's one of the 7 wonders of the world. It's freaking huge. Yeah, amen, Gino. I get it. Come hang with Paul. And Paul will tell you, you can make a career on the easy ones. One more thing about entries, guys. When you know where the market's likely to continue, you know where it shouldn't go. And that's where your initial stops go. You've already begun to manage your trades by having odds favorable momentum. And you've already begun to manage your trades by having a clear path. You've managed your trades by entering where the market is most likely to continue. And now you're actually going to incorporate stop management by putting a stop 4 or 5 ticks above your window of opportunity for a short, or 4 or 5 ticks below a window of opportunity for a long. And so often I see people that don't trust the methodology yet. They'll take this long and they'll have a stop way down here. And they're like, well, I just don't want to get stopped out. Guys, all you've done is created a larger loser if this is one of those that don't make it. You are so good at entries. Within the first 30 days, you are so solid on knowing where the market is likely to continue that you don't have to leave a lot of risk, that your winners can be bigger than your smaller, or winners than your losers. And the other part of that is once you get a reversal bar in the direction of the trade, you can reduce risk even more. A stop or two above that tick or two below, above that reversal bar, a tick or two below that reversal bar. And what you'll find is that you may take the perfect trade, but this is one of those 20 to 30% that aren't going to make it. It gives you a reversal bar, and you may literally have 2 or 3 ticks, $20 or $30, $15 to $20 on the NASDAQ, just virtually no risk on this trade. So when it doesn't win, you're like, powder's still dry. I'm just going to wait for the next best opportunity. And guys, that is really the first hour every hour is identifying momentum. And when you have momentum, let's see if this set up. I'm going to circle a tail here on crude oil. And it pulled directly back to support inside of favorable large triggers. So all we're doing is recognizing patterns, right? Price reached Fibonacci resistance. The triggers didn't break. Look at the reaction off of it. All we're doing is developing trust. Let's see if we can find another one. What do you guys think? Odds favorable momentum. Price didn't reach the area. The path is clear. Can you give me a Y in the room if you see it? Guys, this is how you're going to study this weekend. You're going to go back and circle it when it looks like this. And then I'm going to scroll back on a smaller, faster chart. And you're going to see that it pulls right back to the support right there. Guys, this is how you get good at what you do. This is how you get comfortable with entries. This is how you start to trust momentum. This is how you get to the point to where you can take these trades every day without hesitation. And I'm telling you, when you trust the rules, when you go back and you do the work, when you look at your spreadsheet and you go through 300 freaking pictures of you guys being brilliant with the software, well, you start to believe it. And even if it's part of that 20 to 30%, you take the next trade because you know that there's a statistical advantage. There's so many people in here that have taken trade. Here's Paul. Gino, Paul told you to go play with him. Here's one of Paul's trades. Paul says with all that momentum from a termination condition, he's going to get in at the area inside of favorable large triggers and get paid. And the cool thing is if you look at Paul's picture, this is January of 23, I think. May of 23. The patterns have been happening for decades, guys. All you have to do is figure out how to catch them in the moment. All you have to do is do a little bit of study so that it becomes easy, so that you recognize it in the moment. So when you open up your charts, you say, wait a minute, my small triggers are green and my large triggers are red. I don't have odds favorable momentum. Small and large haven't made it through the areas. I don't have a clear path. This might not be my trade. Smalls are above the large, but none of my triggers are through resistance, even though it turned blue. That's not my trade. And you're okay with the idea that you don't have to be in every movement, that weak triggers can kill a party, that Fibonacci resistance with no triggers through can kill a party. And now you're just saying, hey, look, I've got odds favorable momentum. These areas have the potential to break, but they're not broken yet. If it pulls back to resistance right here at the triggers, I can take a shot at a medium probability trade. Odds favorable, strong triggers, smaller through, larger not. And guys, I've got one line inside and it doesn't look like it's coming back. I've got one line inside of triggers where the market may continue. It's still a 50-50, and now I'm sacrificing momentum. I'm going to tell you guys right now, the plan I'm about to get you says sit tight for a minute. This may not be your best option. The NASDAQ says your small triggers are above the reversal bar marker. You might need to be a little patient. And a lot of you NASDAQ users are going to see that. But you have to know what you're doing. You have to know why you're doing it. You have to know what you're looking for. So I'm going to give you guys the Friday gift. This is the KISS plan. In the KISS plan, yeah, I do, Paul. Part of the default templates, they put the 13.2 midband on the small chart. That's all it is. But if I'm taking an HVA trade and the midband is my target, it just makes it easier to see it here. That's all. It's just a little convenience tool. Yeah, it's part of the template. So if you ever use large chart midbands for targets, it keeps you from having to look left. So guys, this is your KISS plan. This is your Keep It Simple Sunshine plan. This is focused on giving you the best chance of success, optimizing your chances of success with the high probability trend trade, with the 50-50 trade. He's always looking out for me. The Novak spine is not a strong spine, so got to keep it safe as much as we can. Um, Guys, this is just a stepping stone. That's all it is. And if you look at the people in the room, if you watch the trades they're taking, you're going to realize that there's a million opportunities out there for you. There is so much money to be made in the market once you're a chart reader, once you begin to recognize patterns. Through simulation, study, class feedback, underlined and highlighted. Class feedback, guys, you don't have to do it alone. Let me help you. In continuous practice, you will create a plan tailored to your goals. You'll create a plan that revolves around your ability to read the indicators. You'll create a plan that what's the word I'm looking for? It tailors to your pain tolerances. Some of you feel like you have to hold for bigger moves. Some of you just like to get paid. If you look at Paul's charts, Paul takes $100 on every trade. Paul says, I'm going to cover my trade and my commissions every time I take a trade. And when he's taking the right trades, that $100 gets pretty easy for him to hit. Guys, I'm a huge fan of getting paid. My job, there's that 10 a.m. news, guys. My job is to get paid. My job as a day trader is to make money, period, plain and simple. I just passed another Apex account yesterday, and I passed with my trailing threshold 100% intact, $2,500, because I get paid, because I know where the market is likely to go, and I know where it's likely to stop, and I don't incorporate hope into my plan. I simply take profits where it's appropriate. But I do it based on great entries, guys, and that is your plan in the beginning. Don't fight the large chart. Define your entry. Keep it basic. Keep it simple. Keep it focused. I've never had anybody take the high probability trend trade entry, truthfully, let me throw that in there, truthfully, and do worse than 70%. It's usually around 85 to 90. But I like to say 70 because let's have realistic expectations. We're all going to make mistakes. The second you begin to incorporate medium probability trades, that percentage is likely to go down. But if you're managing appropriately, it's hard to not make money even at 30 or 40% winners. I've done it myself. I've seen it happen a lot. So this checklist should be printed out. It should be put on your desktop and police yourself. And then here's the checklist as well with the visual of what it is. Is the market coming from a good top or bottom? Well, that's a termination that creates a full reversal. Do I have odds favorable, or do I have those nasty little anything can happens? Is it a termination? Does it have the potential to break, or is it broken? Guys, understanding the difference between these two will let you know your entry rules. It will let you know how to manage the trade. And then it defines the window of opportunity. It gives you the visual on both, all the way down to where your limit order goes. So use your checklist, define your entry, get great at entries. Give me 20 days of you guys taking entries. If you really want to do well, I'm going to tell you this right now for everybody listening. If you really want to do well, you're going to go back and circle tails this weekend. If you really want to have a clarity every time you look at the market, go back and circle tails this weekend. Go back on the large chart, and when the rules are met, circle a tail. And then if the rules are met, and you circle the tail and it lines up with support inside of favorable large triggers, you have the trade that you're looking for as a brand new user. You need to write your rules on there. Strong trigger lines, no terminations. You need to write your rules, pull back to an area inside of favorable large triggers. And guys, recognition comes through repetition. If you really want to be ahead of the game when you walk in the room on Monday, scroll back on a couple different markets and circle tails and learn to believe that this really is the best of the best. Build trust in it. And then once you have your great entries, you have to do something with it, right? There's this old saying that the sign that you're maturing as a trader means that you manage risk before you ever manage profits. Remember, we manage risk through the advantages present when we take a trade. And now we're going to manage profits based on taking the perfect entry. We're going to manage profits based on odds favorable momentum and a clear path, and then waiting for the area inside of favorable large triggers to enter, because once I know where the market's likely to continue, I know where it shouldn't go, and I'm going to put a stop there. And I'm going to learn through repetition and trust to be okay with losers. I'm going to learn that losers are a part of the game, that losers are a cost of doing business, and they are a normal part of a positive equity curve. You have to be okay with the idea that you have no idea what the market's going to do. The market is nothing more than an accumulation of ticks, up and down. You're trading a pattern that's been proven to win more than it loses. And once you get in, if your stop doesn't get hit, more often than not, it's probably going to give you a reversal bar in the direction of your trade. You're going to reduce your risk 2 ticks above that reversal bar. If it's a long trade, it'll go 2 ticks below the reversal bar. And then you're not going to touch anything. You're going to stand back, put your hands on your head, stand up, do whatever you have to do to not let fear enter the equation. It's 100% if then. If I take the perfect entry, then my stop goes where the market shouldn't. If it gives me a reversal bar, then my stop is reduced above or below the reversal bar. And at this point, either your first target gets hit, there's Paul's target at $100, or you get stopped out for a small loss. And if it hits $100, that feels good. You feel confident, you're happy, you've just had success, and you're going to move your stop to break even. So not only did you get paid, but you have absolutely nothing at risk. And this isn't designed to be the best of the best, guys. Remember, you're going to create a management plan based on your ability to read the indicators. What this does is it makes it easier for you to hold to the second target. And as a brand new user, if simulated money terrifies you, you need to build trust. If losing monopoly money makes you sweat, you need to build trust. If the idea that zero actual financial risk can throw you into palpitations, then you need to develop trust. This very close second target with the rules met helps you develop trust in the idea that when everything is right, it's really not difficult to win. When everything agrees, it's not difficult to win. You won't win every time, but it's easy to win more than you lose. And you're going to hit your second target. It's only at $200. Guys, that's a $300 trade. A $300 trade, if that's the most you can muster every day, is a $1,500 week. And guys, that's a no, my math sucks. That's a $6,000 month, which puts you at a $72,000 year in basic remedial math. It doesn't take into account that there's only 200 trading days a year. But the reality is that it doesn't take big wins to produce big results. And the more comfortable and confident you get, the more your equity grows, you're likely to add on to that. So you could take that 2 lot into a 4 lot, and suddenly you're looking at 144, right? And that 4 lot becomes a 6 lot, and you're north of 200,000. And it's from the same simple advantage trade. And then the cool thing is when you get comfortable, and the large chart says go, and the large chart says momentum, and the large chart says everything is absolutely perfect, well, guys, then you're going to be able to hold for bigger moves. You're going to start moving those targets out a little bit. You're going to start collecting a little more of your money, and that's where things really happen. The chart read that tells you that it's time to hold a little more. You still get paid, you still get rid of your risk, but at this point, you have nothing to lose and everything to gain. And the large chart says go. And guys, this management is a big part of knowing what kind of trade you're in. If it's a high probability trend trade, the management is the absolute easiest. If it's your second trade, that 50-50 trade where the area is not broken, and notice that in all highlight it says one area not broken. Not 4, not 3, not 2, 5 is right out. One area not broken. Guys, this is your first medium probability trade. It still requires momentum because it takes momentum to break an area. On your small chart, it takes momentum because we're not going to sacrifice momentum anywhere if there's not a clear path. So divergence on the 5-1 says don't do it. Brand new user, divergence on a 50-50 says don't do it. If you can't tell the difference between a 50-50 and a clear path, you may find yourself taking the wrong entries, and this is why it's so important to annotate your charts. And you also want it to be from a good top or bottom. You want a termination that reverses the market. This is your best chance of success. Yeah, you know who I'm talking to. And if these are met, guys, get in at the area, right? And see what happens. And it reminds you, again, divergence, no trade. Divergence is a loss of momentum. Your path isn't clear. Don't do it. But you have to manage a 50-50 different than a high probability. You're still going to use the same entry rules regarding the areas inside of triggers. You're still going to use those reversal bars to help you out. But then it reminds you a third time that if divergence prints, get the hell out of the trade. Stop forfeiting advantages. You're going to have fast targets on the first one, even as a high probability trader. And if your trouble spot is at 70 instead of $100, guess what? You're out at $70 and you're break even because you know that it's not high probability. You're getting paid rather than hoping, and you're going to take quick profits on the second. So guys, this KISS plan is designed to optimize your chances of success. You'll create a plan based on your ability to read the charts. It's Friday, so we're going to go story time, and then we're going to take a little break. I had a gentleman one day, it was a while ago, and he called me, and he said, hey, Mark, essentially, and this is great for you new users, and I want you to know that it's okay to do this. He said, Mark, I kind of think you're full of crap. These trades that you say happen every day, don't. These trades that you say win more than they lose, don't. These trades that you put into that stupid plan don't do what you said they're going to do. And I said, you know what? Respectfully, I'm okay with that. I'm okay with you not being comfortable with it. And I'm going to add right now that this gentleman didn't post in the room. This gentleman didn't ask for help. No. Bob, so what he did is he learned his rules in half-truths. And we talked about that the other day. He learned his rules where he said that this is a clear path because price exceeded it. And he didn't take the real lesson that when the triggers don't break, it's no longer a clear path. So every short that he took right here, he thought that my rules were wrong, but his understanding the rules were mistaken. He thought that this was a clear path and not a 50-50 trade. So every loser that he took right here, once again, Nexgen was full of crap and selling snake oil. So in order to really get the most out of what we're doing, guys, post in the room and let me see and let me make sure that your chart reads are exactly what they should be. Let me make sure that your chart reads are in fact accurate. And if they're not, let's work together to fix that. So we went through and he posted in the room a few times. He showed me the trades where I was full of crap. And I said, well, Jimmy, Joe, Bob, Sue, Tammy, because I'm not going to tell you who it was. I said, you don't have a clear path, or you don't have odds favorable momentum, or you have multiple divergences against a 50-50. I said, maybe, just maybe, it's not the rules that are at fault here. Perhaps it's your understanding. And we worked together, and he began posting charts, and we cleared up some misconceptions. And guys, I love to do this. I never get mad at you if you tell me that I'm full of crap. But if you're going to do that, you have to show me what you're doing. And then once we did that, once we got to the point to where we fixed a couple of his basic reading errors, I said, do me a favor. Take 5 days with the KISS plan. That's all I need. Give me 5 days with the KISS plan, and I know that it's going to be frustrating because you want to be in the market more. But take the perfect trend trade and take the correct 50-50 trade and manage them accordingly. And he did. And he called me 7 days later. He called me on the phone. And he said, you know what, Mark? He goes, I owe you an apology. And he didn't. It's okay. Guys, skepticism is what makes us better. Curiosity is what makes science work, right? It's okay to not believe me. But if you go back and do the work and try to prove me wrong, you're going to be with me forever. And this gentleman is trading professionally now, and he's trading well. And after 5 days of nothing but the KISS plan, he was at about 78% winners. And he realized that it wasn't that the rules don't work, it's that he wasn't following the rules. He was looking for so much that he was catching nothing. And again, I can't stress this enough, guys. I want you to question everything. I want you to post in the room. I want you to tell me, hey, Mark, I took this trade and it didn't win and I'm mad as hell. Because sometimes it's the right trade anyway. Sometimes it's part of that 70%, but if you never post, you never know that. Sometimes you broke a rule, but if you don't post, you don't know that. And what we do is we work together, guys, to get you to the point to where you can understand if the rules were met. You can understand that with odds favorable and a clear path, there's going to be times where it runs you over. But if you police yourself, is the market coming from a good top or bottom? Absolutely it is. Do I have odds favorable momentum? Without a doubt. No termination conditions? Not a one. Area for entry inside of favorable large triggers? I'm using my checklist. For sure. Guys, this is a beautiful trade that lost. And anything that wins 70 to 80% of the time loses 20 to 30. And you have to build trust in the plan that you'll be able to take the next trade when it sets up. And then from that very simple concept, you're going to grow with the software. So question everything, right? Focus on the best of the best. Show me everything that you do. Show me your winners, show me your losers, show me your chart reads. And the whole key to this, guys, is having a foundation. Everything that we do revolves around your ability to read indicators. So keep it simple at first. Focus on identifying advantages and then turn that into a trade. But you new users, I'm in a blanket rule. Terminations are bad. No momentum is bad. Areas outside of the large triggers are bad because it's going to keep you safe. It's going to help you build confidence. And then when you become a chart reader, you're going to start posting stuff in the room that maybe you do get in beyond the window of opportunity without areas, because you understand that when everything is down, when the triggers are strongest, this Fibonacci resistance is likely to hold. So maybe you take an entry, maybe you wait for the reversal bar, but what it does is it opens doors for you guys, and it puts you in a position to take more, to take better, to get paid in different scenarios. But if you bypass the idea that you need to learn your chart reading first, it rarely pays dividends. Odds favorable momentum directly into resistance and not one trigger broke, guys. That's a termination condition. No matter what you want to have happen, your three advantages aren't present. And thank goodness, because look at the market push down. Are there any questions about the high probability trend trade, guys? Are there any questions about momentum, termination conditions, or areas inside of favorable large triggers? We've talked about what they look like. We talk about where to find them. We talk about how to study them. The only thing that you have to do now is learn the patterns. Keep taking pictures, present in class, make it easy. And now you're in the marathon stage, guys. You've limbered up, and now it's time to do the same thing every day until it becomes easy. So, one thing that I'm really good at, and I want you guys to get good at it too, is taking 5 minutes. I'm going to take a break. I'm going to go stretch my legs and scratch my dog behind the ear. When I come back, we're going to start looking at the charts that you guys posted. We're going to watch the live market to say to ourselves, hey, look, odds favorable, 50-50. There's my only area inside of favorable large triggers. But if for some reason divergence prints, I'm going to have to cancel it out because my KISS plan says don't take a 50-50 with divergence. Do you see how quickly that read happened? That's what you're going to be able to do. My triggers didn't smash through, they just eked through. Multiple divergences said, hold on, keeps me out of the mix. I'm not going long yet because I've got two divergences from resistance on a 50-50. If it breaks, I'll look for the opportunity, but once again, it looks like my rules are hell-bent on keeping me safe. They sure enough did here on the NASDAQ. And now rule number 2 is going to keep me out of the consolidation. It's going to keep me out of the fight that these guys are having. And then once they break through one of the areas, the trigger's clear, I'll look for my opportunity. Guys, that was 3 reads, 3 charts, 12 seconds. That's how you're going to get to. You just got to take a minute and get there. So guys, go stretch your legs. I'll see you in 5 minutes. All right, y'all, here we go. Second hour. What happened? Resistance to support. No momentum for a long. No clear path for a short. There's your third divergence in the same price range. No momentum for a short. Didn't have it for a long. What do you guys think? Did I miss a trade in there somewhere? Did I miss a long or a short? Because the market's been moving for the last 8 or 9 minutes. Certainly there was money for me, right? That's called consolidation. I wonder if I have any rules to help me identify it and to avoid getting chewed up in it. I feel like I do. So what do we think? 3 divergences, right? Now my triggers are starting to go down, but I'm still into support. So let's go through my lessons. 3 divergences in the same price range may terminate the trend. My smalls are not below my large. None of them are below support. That must be that keyword may. It may terminate a trend. Not guaranteed to. And even though everything's red, guys, it's still a termination condition. 100%. Do you guys see that? It's still a termination condition. 100%. Which means that I don't form an opinion because of 3 divergences. I simply say my rules aren't met. And look at what just happened. Isn't that crazy? Rule number 2 for the win. So guys, I love it when the market does this for me. I love it when it gives me these opportunities to show you why we talk about advantages before we really talk about trades. Why we talk about momentum and a clear path before we ever look for an entry. Because the reality is that when they're not present, you're really just hoping a mid-band holds. And that's a horrible recipe for longevity in the market. So I'm going to scroll up to the top of the room and let's see what you guys have been doing. Gino got us going. All right, Gino and his tiny little pictures. Let me make that bigger. Gino says, did not have odds favorable momentum. Didn't put in there that you didn't have a clear path either. I don't know why you're so hesitant to identify whether or not your path is clear or not. Man, I'm not sure. Are you taking it? Are you using Capture or are you using Snagit? Let's see if we can figure it out together. Capture? All right, let me open up my Capture real quick. And let's take a look before we get into the analysis. So I click Capture. Are your screens, do they take up the whole screen on one screen? So like they look like mine? Okay, this is one monitor. So I go from top to bottom, and you're doing that as well, right? Top to bottom. How big is your monitor? I'm going to capture the image. Is your monitor, are you at 100%? Okay, yeah, you're bigger than mine is. Bragger. Is your magnifier at 100%? Or is it 50%? I think it's 50%. That looks like your picture right there. You probably went, man, I can't see everything at 100%, so let me put it on 50%. It's okay to scroll a little bit. But man, these big pictures are so much easier to read. See if that was it. See if you can drop one in there. I bet that's what it was. Little problem solving, right? Hey, look, 50-50, divergence. Dang it. Lost again. So Gino, you don't have odds favorable momentum, and you don't have a clear path. but you took a shot. Um, I love the language that tells us that we're breaking our rules. I don't have this, but regardless, even though, despite, all the words that let us know that we're breaking our rules. But let's go off the whole read, right? Everything is screaming down. You've got that slowing but not bad momentum. And if you look at your trigger lines, it's actually picking up. The smalls are way through. The large are almost through. You do have divergence, and I can't tell where you got in. You got in at 73.50, which means that you jumped in low as hell. Does that make sense, Gino? You jumped in low, and you jumped in low without momentum, which means that you're really trying to catch a momentum trade without momentum, is essentially what that is. The smalls are inside. You're losing momentum, and you're counting on that resistance to stop you. This is one of those ones, Gino. I don't disagree with the thought process. I don't disagree with the trade. I don't disagree with the read or anything. But one of the greatest things that you can do for yourself when it's not perfect is, rather than getting in on the way up, why not get in on the way down? It's the same damn price on the other side of the small triggers. If you're like, man, it should go down, I want it to go down, I think it's going to go down, there's no reason that you can't wait for a reversal bar in the direction of the trade. And then if it never happens, well, then you don't have to take the loser. Does that make sense? Cool. Que bueno. And are you able to do a bigger picture? Did you try that? See it if your magnifier's at 100%, because if not, I want to find the answer for you, so I don't have to keep adjusting my picture over and over. But I don't mind. I will adjust my picture. I'll do that for you, Gino. But it's a good read, and guys, this is what we're going to do too, is you may have a good read, but I may be able to say, man, I think I found a better entry for you. I think we can reduce risk. And Gino, the other part of that too is, if you wait for the reversal bar, then your risk is established right above this. So you already have your risk, you already have the bar, you're on the correct side of everything, and everything's moving in the direction of your trade, and that feels good. And then the same thing is true here. When everything says down and you're expecting that resistance to hold, is there any reason you can't just wait for a reversal bar and get back in and make a little extra money? All right, Dwight, termination condition, and you got run over. 13-2, bad top, odds favorable, not a clear path. No, it's not. It didn't work. So when you take the picture, you are at 100%? There's got to be a disconnect somewhere. I'm wondering what it is. Here, let me do this. Let me post a 50% one in the room, and let's see what it looks like. And see if it comes up like yours does. No, mine still comes up big, even at 50%. I'm not sure. That's weird. Whoops, I accidentally closed yours out. Dwight, are you with me in here? This is such a great thing, right? Because you identify that it's not a termination that creates the reversal. You identify that you don't have a clear path, and then you shouldn't have even been looking for an entry inside of favorable large triggers, right? Especially with divergence. And I think this is the one. So Dwight, let's talk about when it makes sense to give it a shot with this much momentum and when you should probably pump the brakes. And it's that divergence right there. That divergence says pump the brakes. Divergence directly from a fib that's a termination You're validating and verifying that that's probably going to bounce. Does that make sense? And I know a lot of traders that if it's odds favorable and no divergence, they may try that little run back. But the second this divergence prints, they're like, nope, not my trade, not going to do it. So maybe a little thing. I love the momentum. The momentum's outstanding. And that much momentum, a lot of times there's a retest. Whether or not there's a divergence here will help you greatly in determining whether or not that retest is going to happen. You're up 200 on the week, Paul. I can fix you instantly. Well, you can fix you. Stop taking so many maybe trades. Stop giving up momentum and entry areas, Paul. This week, you've posted a lot of pictures where you're forfeiting 66% of your advantages. And I don't know what the results are from those, but I've seen it a lot this week, and I'm pretty good at recognizing patterns. Ron C says, when everything is strong, when price clears the area, when he has odds favorable, momentum phase, Ron says it's pretty easy to get paid on these. And I agree, Ron, 100%. Strong triggers for the win, clear path for the win, momentum phase, bars outside of the small for your best possible momentum look ever. Rob, whenever you have the room in the pop-out mode, you have to hit Control V. You can't right-click and paste. You have to hit Control V to get that picture in there. And then Dwight, you said the tail after your entry was a small gain, but you didn't take it. Does that mean you got a reversal bar here that went down and retested with all the momentum? I'm not sure what that means. Oh, this one right here was a small gain? I got you. No, I'm with you now. Yeah. It's just not the right trade, brother. I got you. That makes sense. But it wasn't a small gain because you got stopped out. It was just a fluctuation on a small chart. That's keeping language accurate. Then Bob, let's see what you did, my friend. Bob says a lot. Brought stop below entry when started back down. Price coming past 1-to-1s, but moving through. Small triggers against. Oh, I'm reading on the large chart. So let's see. Large chart says momentum from a bad top. Bob, are you worried about the small triggers against on a small chart? So let's keep it just on the 3 rules and let me know what you think. Odds favorable, right? 50-50. Divergence on the 50-50, and absolutely the only areas inside of a trigger line, Bob, are all the way up here. So not a clear path, not a clean entry area. So I don't have any problem. Like, don't take this one, right? 50-50, divergence, bad top. Great job. And then when it comes down and you have odds favorable and everything looks good, you do take the perfect entry. Your stop keeps you out of the window of opportunity. You're able to get paid on it. Oh, nope, you're out, break even. I guess the question, what did it do after? What did it do after it bounced off of resistance inside of favorable large triggers and got below and everything said down? It went down. So Bob, why were you break even? When everything finally started going your way, why were you break even? Fear? And fear is typically my answer. Well, I know you pulled your stop. Why? There has to be a reason. What was going on in your head that said, you know what? With this odds favorable momentum, with this clear path, with everything going down, everything pointing down on the right side of my small triggers, I better get to break even quick. And guys, this is a management lesson. And this is where talking to yourself isn't the one-to-one part of the window of opportunity. And Bob, we're just going to do a management lesson. That's all we're doing right now. Your window, and guys, this is such a good one. This is your window right here, guys. So your initial stop, once it starts going down, is right here. It went to the top of the window. That's cool. We know that it can. And you know what's funny, Bob, is you said you pulled your stop because it went up over the 1-to-1. But by the time you pulled your stop, it was below everything. So maybe even when it bounces off the 1-to-1, you can reduce behind that tail even more. But if you talk to yourself, and I want you guys to get in the habit of doing this when you're managing trades, and management's hard. Bob, management's hard because you have something to risk at this point. When I'm managing a trade, I say, what does my large chart say? This one says odds favorable momentum and a clear path. This will always forever be the best of the best. And this is the one that makes me giddy. So what does that tell me? That tells me that the small has to give me a reason to jump ship. Pardon my French. Or tighten stops. Otherwise, I stick to my plan. And those mofos gotta come get me. I won't offer a sacrifice. Does that make sense? When the large chart is absolutely perfect, I need something on the small chart to say get out, to move your stops, to do that. And so far, I didn't have it yet, right? I had one divergence, thank goodness. That's what got me back to the window of opportunity. So when we're right here, this is where my brain goes, Bob. When we're right where you pulled your stops, this is where I say, if second higher divergence prints, I'll exit. If it never does, no reason to move stops until my first target is hit. And this is so hard to do because you're watching it go up, you're watching it go down. And this isn't just for you, Bob. This is for everybody. You had the courage to put it in here, and I appreciate that. This is for everybody. Because when you get into a trade, you have to ask yourself what changed, right? What changed? Why would I move my stops? And nothing has changed. So you go back to your plan. What does my plan say that I have to do? My plan says I have to hold this trade with this look unless there's a second higher divergence. I have to hold this trade unless there's 3 divergences in the same price range. And this is where simulator is huge, guys. If you get fearful on simulator, you'll be twice as fearful live. So start building those great habits on the simulator. Start really adhering to your plan 100% when you're on simulator, and it really does make the transition to live a lot easier. A lot easier. But I'm going to tell you right now, you will pucker when you go live. Everybody does. Scary to put money on a trade. It's scary to have the fear of losing money. Termination condition, divergence print. So Dwight, this is a pretty cool lesson. Thank you for this, Ron. Some of you were going long right here. Divergence from a fib, it becomes common knowledge once you follow patterns enough that this means that mid band's probably not going to hold. This means we're probably pushing lower. And Ron has learned how to capitalize on that all the way down to the reversal bar marker. So this is not only a great trade based on chart reads, but this is also an awesome, awesome opportunity for you guys that love to take the next long, the next short when there's divergence from a fib and can't figure out why you keep getting run over. It's a pattern that repeats itself. So write that down, take a picture, put it in your spreadsheet. And then Zorro, of course, like a rock star, everything says down. You let the area clear and you get out at the next trouble area. And then with all the momentum, you let the area clear and then you tighten up your stop as those bars begin to get back in. Zorro, I absolutely am enjoying the heck out of watching you do what you do, so new to this. And then this one, you're on the wrong side of things. This one, you've got split triggers. This one, we have fibs. And then once again, guys, I'm going to compound that lesson. No divergence says take a shot. But there's also something else that I'm going to point out, and you're going to hate me for this, Zorro. But I've been doing this a long time. Is you've showed me two winners, but you're down $35. So what this tells me is that we're hiding losers. And guys, this is normal. I see it a lot. We're hiding losers because losers hurt. Losers hurt our feelings. We don't want to show losers in front of a group full of strangers. We don't want our peers to look down on us. Guys, losers are where the money is made because losers are where you get these great lessons. Oh, Bob, you forgot to get out of the way of news. Yeah, I told you guys this morning, everybody's going to do that at least once. And if this rubs anybody the wrong way, tape up and play hurt. Because if you're showing me nothing but winners, but your P&L is negative, then you're forfeiting the lessons. Something is still wrong. Something isn't right with your reads. Something isn't going on. And if there's no annotations, we're not sure what it is. And if it's not two charts, we're not sure what it is. And Zorro, I'm not trying to put you on the spot, but I know you're new, and I want you to succeed, which means that I want to help you and eliminate whatever it is that took your money from you. I want to help you through chart reading, through annotation, to get you where you need to be. Putting your boat in the water without the plug, you do it once? Yeah. We did it to the jet skis once. John and I were at some lake in Austin. We may have allegedly put it in without the plugs. And yeah, you do that once and then you remember not to ever do it again. All right, Dwight, let's see what we got, brother. Dwight says, everything is down. Now we got that 50-50, but it's cranking, blowing through. Entry at the mid-band, that's where you got stopped out. You showed us this one, but you're like, no, it's the right trade. They just wanted to go up a little higher. So when everything rolls and you've got those strong triggers, I love your momentum trade, Dwight. Great recovery at getting your money back. Solid, solid trade there, man. Joel, beautiful chart read. Good top. There's your strong triggers. There's your strong triggers, but it's not a clear path. And then, man, we're going to compound this lesson as much as we can today because I think this is a good one and we don't talk about it much. Dwight, do you see it again? And then this would keep Ron from the long. Do you see the no divergence with all that momentum? That's the one, guys. If you're going to break your rules into a termination condition, that's going to give you your best chance of success. And I'm not advocating trading into termination conditions if you're brand new. Do you see how there's no divergence and strong triggers into the termination, Dwight? If I'm going to take a shot hoping that this breaks, it's going to come from a good top. It's going to have the best momentum ever. And it's going to have no divergence. And again, I'm not advocating trading into termination conditions, but if you're going to do it, that is the best way to do it. Because when divergence prints from that fib, Ron's making money against your long, right? When divergence prints against that fib, Ron's making money against your short. So that's a great one, guys. If you're going to break your rules, try not to forfeit advantages anywhere else. It really will make your life a little more effortless. And then Paul. Odds favorable, clear path, no areas inside. Paul trades the mid-band. This is your look, Paul. Your chart's messed up, by the way. You need to refresh that one. Out at trouble. Yeah, no reason to exit. And then, Bob, this looks a lot like yours, right? Everything is going right and getting stopped out, arbitrary stops. Guys, they have cameras on you. They know where these stops are. They know where your fear stops are, and they'll just come get you and then continue with the trend. Happens all the time. And then Dwight, let's do it again. Ron, thank you for all these great lessons. Termination condition, and when the divergence prints, not trying the short, Ron's making money on the long. Divergence from the fib. I had no intention of this becoming a lesson today, but guys, this is the best one that I've seen in a while for you guys that are into taking chances. I hope it breaks. Divergence from the fib is going to squash your hope. You will be hopeless. And then Roku. Everything says down. Pivot, have patience, wait for momentum. Momentum, you're in the momentum phase before you hit the fib. You get in on the pull back to the fib, watching the large triggers and small triggers. Scissors start to close. So you exit the trade. Roku, beautiful usage of momentum. Even with the areas in the way, that much momentum, you're on the right side of everything, and it really makes it pretty effortless, doesn't it? And those happen fast. That's how you get paid quick. Take care, Zora. Paul, another one from the wrong side. And you get paid. And then once everything is going right, you get stopped out again. And that's okay. I love tight stops. And maybe with gold, maybe with the ES, maybe that's just part of your plan, right? Oops, same picture. Joel. Termination, odds favorable, 50-50. Because of the termination, you say, hey, look, I can give that one a shot with the one divergence because it's coming from a good top. Joel, your chart reading has been spot on today. Roku, what does a nice top mean? Can we talk about a couple definitions, Roku? Magenta is not a resistance line. That just means that there was a loss of momentum right here. But this is not a good top. This is just a pivot from space, to be honest with you. And very often when you have one of these pivots from space, the mid-band's your first target. But with this much momentum, the market continues down and it hits Fibonacci support. And when it hits Fibonacci support, obviously perfect termination. The market heads up. There's a potential trade. There's a couple potential shorts. And then it reaches the divergence high, which is a problem. Loss of momentum all the way back to the mid-band. Large triggers don't follow. Straight to the termination. Now we have rockstar top, which starts it moving down, and everything is strong. And I'm not sure where you took trades in here, but my guess is that you probably took one somewhere in there, and possibly there, and maybe even coming through here when that momentum was the absolute best. But that's just a terminology. If it doesn't come from an area, it's not a good top. When it comes from an area, it's a great bottom or a great top. Awesome job, Roku. Yeah, I've got you figured out. I know what you're looking for now. And you're doing it consistent. Nicely done, man. Paul says best entry or no entry. Either the area inside of favorable large triggers or not. 50-50 with divergence. Like it, Paul? All right, Andy. 50-50 with divergence. You do get in a couple ticks above. Take quick profits, second divergence, take your exit. Andy, awesome management, man. I'm looking. Are you still in here? This is how you take a 50-50, guys. Bad bottom, 50-50. If you do it with divergence, it's not a home run trade. Awesome job, Andy. Great management. Great in the moment. Haji, 50-50, bad bottom. Oh, divergence from a fib. Holy shnikes. Hey, here's a loser for you, Mark. You know what, Haji, this is where my brother would say, how many times are you going to break your rules and lose before you stop breaking your rules, right? How many times am I going to hope a bad bottom 50-50 with divergence goes up until I stop taking it? My number, Haji, was about 6 million, I think. I took it so many times, to the point to where I'm a little gun shy with it. But there's a couple different things going too. Notice how your triggers are beginning to split. That happens a lot when the area is less likely to break. Divergence directly from a 1-to-1 on the small chart is the same idea as divergence from a fib. So a couple different things that you can get in there, but that real simple KISS plan keeps you from taking that trade and hoping that it works. And then Cav, good bottom, nothing but strength. You take the pullback to the triggers, not the areas. That's your thing. Easy money. Momentum for the win, guys. Momentum for the win. Over and over. Momentum for the win. And then Haji, 50-50, divergence. You take this one, even without any strength, your small triggers are on the wrong side, but you're like, good top. It's got a better shot. And then you get out at trouble. So I'm glad to see that, man. If you're going to do it, manage it, right? Still pretty risky, but if you're going to do it, manage it. That's a lot of momentum breaking through. It's from a good top. It's a pretty big window of opportunity to have the smalls on the wrong side of the large with divergence printing, but you didn't even see the divergence yet. But you see how the smalls are on the wrong side of the large, Haji? You got away with one here because of the momentum, and I'm happy to see that. This one's not going to work as often. This one, without the divergence, with the strong triggers, with the areas, this one's more likely to pay you than this one is. So I'm glad that you didn't hold and hope. Nice job. Good job, everybody. We just made it through all your pictures. Bad top, strong triggers, termination, divergence from the termination. We've talked about this lesson once or twice today, haven't we? Termination, bad top, divergence from the fib, small triggers against. What else can we say to make this one seem like a bad idea? Adriana, everything says down, you get in at the area of resistance and you get out at support. I mean, oh my gosh. That's a pretty optimistic second target with support and no triggers through, but beautiful entry. Right? Odds favorable from a good top, perfect entry, perfect exit. I don't know if you're doing Apex or not, Adriana. And I'm just gonna, not yet, but is that your intention? Is to do Apex? Actually, guys, exciting news since we're bringing it up. I'm happy to announce that my brother got all the signatures, and Nexgen Pro funding has actually come to life, and there's some stuff that needs to be done. Well, Adriana, I'm not sure what the drawdowns are on that one. I'm not sure that how he's going to do it. But guys, for those of you that are Apex, holding through big bounces is disadvantageous. They'll get you on the trailing threshold. Getting paid at the areas and then taking the next entry works out great on stuff like Apex. I haven't seen the rules yet for what Nexgens is going to be. I should probably learn them because I'll be teaching them. It's a beautiful trade though, Adriana. And then Andy, you had a second picture in there as well. I'm sorry. I think I've just got the one. Did I miss the second picture? So, Gary, that's all caps. It's a little intrusive. I don't know. I imagine yes. My brother has gone through $500,000 making it good for NT8. He's also developing a browser version, so you guys that want to sit on the beach with your iPad can do it, so that you can open up Windows anywhere on your laptop, and it'll be similar to Tradeovate, where you can get in and you'll have the next gen software at your fingertips. So, guys, there's so much great stuff. 27 years in the industry. He will, Cav. Failure's not an option with my brother. My brother has zero interest in failing. 27 years in the trading business, there's not a lot that have been here as long as he has, and there's a reason for that. 1029 and 1045. All right. So let me go. Thank you for that, Andy. So there's 1029. And then I'm going to open up 1045. Pass the news, bad bottom, 50-50. There's your entry. Great management. And then the second one. Oh, it looks exactly the same, but it is different. I apologize. You broke above, so acceleration and a clear path, Andy. Nice job. And then pulls right back to support. And man, they stopped just a tick or two short. Great management on both, man. Great management on both. I love it. Bob, thank you for that. We try real hard to be the best that anyone's ever seen. And we love what we do, and I think that's a big part of it. And it is, it's like the hair club for men. We don't just teach the software. We trade the software every day, which is important. And I'll tell you what, for you guys that do love Nexgen, if you've never gone to Trustpilot and left us a 5-star, now is the absolute best time to do that as we get into this new business venture. If you've never gone to Trustpilot, and I think that there's probably links to it, and I don't usually ask people to do this, but if you go to reviews, Trustpilot is the industry leader kind of thing, guys. If you have something nice to say, if you appreciate what's going on, go drop some in there. Go say something nice. Give us 5 stars. Help set us up for success. We appreciate that very much. It's nice to get that feedback. Most people only give feedback when they're angry. If you're happy, drop a little in there. Yeah, I do, Andy. I do have imposter syndrome. You know what's funny is I don't take compliments well. I never have, which is why John runs the Trust Pilot. I would be like, oh, you. I don't take compliments well. I never have. Um, and I do that too. For those of you that don't know, I tattoo outside of trading, and I still can't for the life of me figure out why people pay me to draw on them. But they do. They seem to like me. So, where are we? I think we've seen almost everything. Miss Jen gave us one. Let's see what you did, Miss Jen. All right, so let's go through. All right, so we're just going to go through some language real quick, Jen, if you're cool with this. So a strong top or bottom is going to be defined, especially for the new user, as a no triggers through termination condition that creates a full reversal of the market on the large chart. I'm going to put that in just to make sure. So what we're looking at here, price didn't reach an area, didn't hit one-to-ones, fibs, mid, and like nothing at all. It just kind of turned from the middle of nowhere. And that happens sometimes. But when it did, it created this divergence line. And that's what fools us as brand new users into believing that it is a strong top. But all this divergence line is a loss of momentum. I appreciate that, Haji. I really do. It makes me smile. I just don't accept it very well. So that divergence line, Jen, not a strong top. It's just a loss of momentum. Does that make sense? And in order for it to become a strong top, what we would have wanted to see is price pull down and then pull back to it where it becomes a termination and then finish the move. And that's when we end up with a strong top. So when I see these divergences from the middle of nowhere, it just lets me know that there was a loss of momentum. And it doesn't mean that the market can't go down. It just means that it wasn't a decision-making point. This is where the sellers stole some momentum from the buyers, which makes my mid-band my first target as we come through. And then when that mid-band held and the large sugars were a full bar away and the market reverses, this could be considered a strong bottom. And then one more thing that I want to point out over here is on your 13.2, Jen, you don't have synthetic triggers on there. Yeah, Haji, I have been told that I am an HR nightmare, and I know that I am. I'm an HR nightmare. And sometimes my metaphors aren't the most PG-13. So Jen, what you need to do real quick is come over to your 13.2 and go to templates and go to load. And then let's get that Nexgen NQ Futures 13.2 dynamic Renko bar on there. And that'll give you the synthetics. And that way it's easier for you to take entries inside of favorable large sugars. And then let's go back and just state the obvious. With all this momentum, with everything screaming down, with absolutely no divergence, getting in on the right side of the trouble, yeah, absolutely. Right click and go down towards the bottom to templates. And then once you get to templates, you want to go to load. So if you click on load, it's going to give you all of your options. The one that you want to put on there, and I'll show you guys if it ever doesn't look right. Nexgen 13.2 dynamic Renko bar. This is your small chart for NASDAQ. 34.5 dynamic Renko bar. This is your large chart for NASDAQ. And because it moves so fast, that's why we use this one. And then if you are using a range chart when you get there, 21 range, 2 fast triggers. This will be your NASDAQ range chart to go with that size there. So let me give you guys this in the room. And then what should happen, Jen, when you put that template on there, it should get you those synthetic triggers, and it'll make your entries a little easier because you're missing them here. But if you see how it pulled back, if I had to guess, your synthetics would have been somewhere up here. Yeah. And while this is a good momentum looking trade pulling back to it, it's one of those you're hoping it holds. And this is kind of the same thing. But with all that momentum, you go full-blown rock star all the way down to here. So I like the trade despite not having all the information, which just kind of verifies that you're kind of a big deal, right? Nice job. Ron says one for the road. Strong triggers, price clears trouble, momentum phase, get in, get out, get paid. Hateful strong triggers. I heard that in the, oh my gosh, the old lady from the Jeffersons, his mom, that's like, George. That's what I heard, hateful. Yeah, Rob, we are pretty PG-13 here. I try to keep it relatively professional. Mother Jefferson, that's it, Gino. Thank you. Read that in her voice. It's hilarious. But guys, this is Ron doing the exact same thing. This is Ron waiting for odds favorable momentum. This is Ron waiting for price to clear the area. He doesn't use the small and large. He lets price clear. And then with the momentum, he just takes quick shots. It's just a chart read. These trades last 2 to 3 minutes tops, typically less than that. And then Paul taking the momentum style. Letting the one-to-ones break, low risk momentum. I like it. How'd that work out on crude oil? Let's go take a look. I love seeing y'all's entries. I love seeing what happened after as well. So we're still in the midst of it. Good bottom, best momentum ever. Small triggers break the one-to-one. It pulls back, begins to head back up. And then Paul's using another chart over here that tells him, here's your low risk stop. If this one's going to work, it's going to go from here. If it's not going to work, it's going to come pull down and give you a second down bar on that range chart. Nice execution. We'll see what happens. That's such a good look, and it's coming off the top of the outer band, Paul, which is nice. All right, guys, I'm going to run a lap. Go stretch your legs real quick. Do me a favor. We're coming into Friday last hour. You guys pick a topic for me when we come back. Let me know what you want to talk about. Otherwise, I'm going to do that thing where I ramble and get all soapboxy on you, and nobody wants that. So I'll be back in 5 minutes. When I come back, let's talk about what you guys want to talk about. I don't care. Tell me your plans for the weekend. I'll be back in 5, guys. All right, y'all, I am back. Oh no, did I just close out my crude oil large chart? I think I did. Shoot, dang. Hold on one second, guys. I have to build a new crude oil large chart. Actually, you know what? There's an easier way. If you ever close out a chart on accident, close your workspace, and when it asks if you want to save, say no. And then when you reopen your workspace, that chart will be there. Here's a little trick for you. And then once this comes up, Rob, we're going to do termination conditions. Last hour's yours. Paul, beautiful trade. I like the way you manage it too. You can hear now. Nice, TLC. I didn't know that you couldn't. Paul, that is picture perfect. Nicely done. All right. Here we go, Rob. Oh, you just got on, you couldn't hear? Oh, well, I was on break. That's why. If you can't hear anything, always look and see if that's up in the chat box. I was had to go eat a popsicle real quick, TLC. All right, Rob, so we are going to open up a large chart. And here's your, this is pretty good too. And we're going to take a picture. And the first thing that we're going to do is we're only going to focus on termination conditions, Rob. We're not going to worry about potential to break. We're not going to worry about anything other than textbook termination conditions. So the definition for a termination condition, and I'm going to give you this picture, is that price reaches an area, triggers remain below resistance, above support. And you're using Snagit, right, Rob? So you don't have to write that in. But let's go back and just look at them historically a little bit. And I'm going to use the stamp. And I'm going to use the stop stamp because I think that works pretty good. So here's one of those. Price creates divergence, right? Just starting from the left side, we're going up. It goes through the area. It goes through the area. It doesn't hit an area, right? It creates the magenta line. It doesn't hit the magenta line. And then, Rob, price reaches yellow 1-to-1s. Where are the triggers, above or below? Boom, stop. That's it. That's a termination. Price pulls all the way back up and it reaches the divergence high and the trigger lines are below. That's a termination. So we go through that exact same recipe every time. Price reaches an area, triggers went through, that's 50-50. Triggers break through, the area broke. Price reaches resistance, no triggers broke above it, that's a termination. Just another loss of momentum. Price reaches resistance, the triggers are below, and this is what it's going to look like in the moment. So in the moment, that's a termination condition. So one of the easiest ways to learn your termination condition is to go back and look at it historically. Remember when you were going back circling triggers so that you could understand strong triggers? Same thing. It doesn't break, the market reverses. It doesn't break, we get a bounce. Triggers don't break, it continues up. So just scroll back. There's a beautiful termination condition. Do you see it? So that's what it looks like. Look how it hits resistance. And if you just say no, It pushes all the way back to support. There's one of those pivot stop outs. There's no triggers through. So you start this recognition process. Price reaches the yellow 1-to-1s. This is it in the moment. And nothing is smashing through the area, right, Rob? It's up. It's all about the triggers, 100%. It's all about the triggers. So if we go to the Russell, and it's been dancing a little bit. We'll scroll back. Nice one at resistance, bounce at resistance, divergence low, triggers don't break. Weak triggers even push it up, straight into resistance, straight off of support. So you can literally just start scrolling back. Look at that termination. And what you're going to do is if you keep looking, just where did the market pivot, right? Let that be your question every time you look at it. Where did the market pivot? And what you're going to find is more often than not, it pivots when it's reached an area and the triggers don't break. And this is the easiest way to learn termination conditions. The first thing is you have to know the recipe. And the recipe is that price reaches the area first. And then if the triggers are below resistance, above support, nothing. What does a termination condition mean? It means it's a place that may reverse the market. So I want it to be that key word, Rob, may. When this, let me take a picture. We're going to go through. And then, Bob, I'll get to yours in just a second. So right there, the only thing that you have to say, Rob, is no more short trades. That's it. Price reached the area, the triggers are above, no more short trades. Cool with that? So there's actually nothing to do except nothing at all. Hey, Ed. And then check it out. This termination reversed the market. Now it's a strong bottom. So between here and here, I'm going to look for an opportunity, right, until price reaches it. And then when the small triggers break from here to here, I'll look for an opportunity. And then when it doesn't break, I'm doing absolutely nothing. And what you'll notice a lot is that strong triggers break areas when the triggers get through, when the smalls get through and the large don't. But right here, doing absolutely nothing. I'm going to wait for the reaction. Right here, I'm doing absolutely nothing. I'm waiting for the reaction. Right here, the triggers don't break through. I'm doing nothing. This is the exact same picture that we see in the manual. And then eventually, it works its way down. So you're going to start seeing these termination conditions. The more you scroll back, the more clarity that you'll see. And I'm not saying do anything more than look at price reaching this divergence low, Rob. How many triggers broke through it? None, right? They're all way above. That's a termination condition. What does that mean? That means that this short trade is less likely to work. I don't have momentum. This short trade is less likely to work. I don't have a clear path. This short trade is less likely to work. It doesn't mean that the market won't go down from here, but what it means is that I don't have momentum. I don't have a clear path. All I really have is a red chart. And if it goes down from here, it's a low probability win. And it's not the low probability wins that are a great way to create a trading plan. It's the high probability wins, the patterns that have proven that they win more than they lose. Does that make sense? So Rob, go back and just find the pivots and see where the market stopped and where it continued. And one thing that you can do that's pretty cool is you can run market replay at like 10 times strength, 20, 30 times pace. And if this is my most current bar, my brother used to do this. This is how he got so good at it. Market replay is running, and he's just going like, oh, I'm trying to make it so it scrolls. Likely to stop. I have to wait. Potential to break. Area's broken. And then it just keeps going. It reached resistance, likely to stop. Sure enough, it did. 1-to-1's likely to stop. And you can just run it and just ask yourself, at any given moment, is the market likely to stop or continue? And you'll see how often it bounces off of these key areas. But the cool thing is you see the key areas before you get to them. And then you're just kind of working through it. So I hope that's helpful. Use it with market replay. But there's your termination condition, Rob, and check it out. The short trade didn't work. Without momentum, the short trade didn't work. I never know what's going to happen, but I know that my advantages are gone when it looks like that. So does that help a little bit? And then even more so, you can always go back to the user guide. And you can do this. And I'm not done giving you everything that I can think of because you actually asked a question and I appreciate it. It's about the trigs. So I want you to watch this video this weekend. Fibonacci and trigger lines. Rob, I think that this is going to help you a lot.
In this lesson, we will teach you when Fibonacci lines will hold or break.
Because it's all about whether or not the lines are likely to hold or break. Watch it, and because now you have a better understanding of what it is you're looking for, when you watch this video, it's going to make a lot more sense to you. And this is for anybody focused on termination conditions. Watch that video. This is my brother going on for 45 minutes, talking about good tops and bottoms, talking about areas that may or may not hold, and it really does help. Bob, everything says down and you go short and jump out too soon. Starting to recognize a pattern. And you hold this one. Nice job, Bob. Great hold. Go to the next one. No, we're going to talk about this one too. That's a great look, isn't it? Oh man, Rob, you're not fully there. You haven't been doing this very long. And Bob, this one's a little less likely, right? We do have 3 divergences, but they're descending, not ascending. And you still have odds favorable, which makes it a nice entry. But with divergences, Bob, because you're at this point, and guys, you're going to go from super basic to next level, right? If your window is from here to here, and you're losing momentum, it usually gets to the top of that window. When are we going at the bottom of the area without hesitation? When it's odds favorable and a clear path. So losing momentum, it makes sense that it may push a little higher. Odds favorable and a clear path, it makes sense that it'll bounce at the bottom. Does that make sense, Bob? Beautiful short, by the way, and I love that you held it to support. And at that point, who cares what happens next, right? You got paid. Strong trade. See what Cav did. Oh, Cav, let me try it again. Cav, your picture's broken, brother. If you could maybe drop me a link in there. I can't get in there. Same one, Bob. I love that trade, everything about it. Where is the spreadsheet with a year of trading starting with micros? Oh my gosh, Ed, I have no idea. That's probably been gone for so long. John may have something. He probably has it saved on his computer if you asked him. We could build one. Adriana, it's probably not you. Because if I click on Cav's links, which always work, it was giving me a broken link, which means that there may be either Discord or screencast problem going on. The direct links to screencast seem to be working, but the ones that are copy-pasted into Discord seem to be not. So Adriana, if you want to post the screencast link, or Cav, if you want to post the screencast link, I should be able to get it. I'll ask him too. Ed, I'll see if I can get a picture. Entry scared because of the fibs coming up and small triggers getting in the large, but targets filled. Me too, Rob. Okay. So, Adriana trading the NASDAQ. One thing that I notice, Adriana, is you're trading the June NASDAQ. Oh, that's right. That's 06. Never mind. I stink with numbers. All right, let's go through this one together. Let's talk it through. I like your annotation, getting scared because the fibs are coming up. If I'm not at the fibs, it's a target, mama. It is not anything to worry about. So let's see what we had. We had a termination that creates the full reversal that gives me the absolute best momentum, that gives me a pullback directly to resistance inside of triggers, and the small triggers are more than a full bar away. Adriana, I can't find one reason for you to be scared about this trade. I can't find one reason to be even the least bit nervous about this trade. So let's see. Strong top. Is everybody good with that? Let's go through how I read a chart. I have a strong top. I also have odds favorable momentum. Are you guys with me so far? And then I think Bob pointed it out. It's a 50-50, but from a termination that created the reversal. And what does that mean? That means that the buyers tried and the sellers said, absolutely not at this key area. Absolutely not, buyers. To hell with you and your whole family. I'm going to push it to the bottom with odds favorable momentum. This market reversed at a decision-making point, which means that 50-50 is more likely to work. One divergence with this separation between the small and the large doesn't scare me. Small triggers more than a full bar away creates a huge advantage. So we're piecing it all together. Where is the market coming from? It's coming from a termination that created the reversal. What does the momentum say? The momentum says it's the absolute best of the best. But there's a divergence. Let me go to my rules. My rules say if I'm following the KISS plan, that I can't take that trade. My rules say that if I'm following the KISS plan, that's not my trade. Sergio right here says chart trader. Click on it. And you can chart trade, you can hide it or turn it off. But it's the one, it's like a little stick with two things coming off to the right, to the left. So guys, here comes your next level. Awesome, cool, man. My rules say no trade. Is everybody? The KISS plan says no. So I'm gonna do this. KISS says no. If you're a brand new user, the KISS plan says no because of divergence. So if you're following the KISS plan, this isn't your trade. Does that make sense to everybody? If you're following the KISS plan, this is not your trade. Because when you go through the checklist, I do have momentum. I do have momentum, but my checklist says, hey, no dice, Mark. That's not your best of the best. That's the one that keeps taking your money. So for me, that's no trade as a brand new user. But now I want to go to, remember when I said that when you guys learn to read charts, it's going to open doors for you? When you learn to read your indicators in the moment and take the big picture, you're going to find more opportunities. So what Adriana probably understands, and I'm going to, whoops, wrong one. I'm going to use the call out button. On a 50-50, if it's coming from a strong top or bottom, I will ignore one, count it one divergence if everything else is perfect. If everything else is a yes, I'll ignore one divergence. I won't do it in the beginning because I'm not reading my charts fast enough to piece it together. And I'm following the KISS plan. But when I've seen this trade 100 times, I'm like, there's that good top. There's that crazy momentum. And then when I say perfect, what do I mean? I mean the absolute strongest trigger look ever. I mean the least amount of risk I could ever hope for, because it's still a medium probability trade. So a month from now, 2 months from now, Bob, that might be your trade. But if you can't gauge where the market is coming from instantly, if you can't recognize the momentum in a fraction's notice, if you don't understand that it's 50-50 at the drop of a hat, then you don't know that that's worth a shot. How about eliminating yes for where? I'm confused. That's a deal breaker for the new user. That's it. Love it, love it, love it, hate it. Is it from a good top or bottom? You have to be able to mark yes. If it's a no, so Bob, going through it again. What if, hold on, let me go find an example. I'm going to find one here. Hopefully I can find one. All of these are from good tops or bottoms. All right, so we're going to do this one right here at 9:42 a.m. I'm going to circle that one. Well, and of course there's not divergence because that would have made it, a better lesson. Not from a good top, right? But Bob, if you have this level of momentum and just a fraction of the large triggers aren't through, and you have the strongest triggers in a small window of opportunity but one divergence, is it worth it to take a shot? And this is what trading is, guys. This is determining whether or not you're willing to take a chance, whether or not you're willing to risk your money. Do you feel good about it? With no divergence, I love this trade. With divergence from a bad top right at a mid-band, that's not my trade. Why is that not my trade? Because I know that divergence from the middle of nowhere can bounce at the mid-band. So a 50-50 anywhere near the mid-band is less likely to work. And then the flip side is A 50-50 right at the mid band from a good bottom is good. That's a good bottom, but that's a termination condition, right? So I'm not expecting this to break. So what you do is you get these repetitions where you start to really recognize and realize these advantages at the fraction of a second. But until you can do that, guys, it's so smart. Remember that at the beginning we said that this is designed to optimize your chances of success, to give you the absolute best of the best, to keep you focused on what's going to bring you the more winners than losers. All right, Ed, late entry, took the money and ran. So you missed your pullback to resistance inside of favorable large triggers, but everything was so stinking pretty that you were willing to get in late with all the momentum, and you still got paid. Ed, you haven't been here for a little bit, and I don't know if you noticed this or not, but let me show you one of the things that makes these trades easier to win. Do you see how the bars are outside of the small triggers? This is what we call the momentum phase. When the bars are outside of the small triggers. So as you're coming down, you're rock solid in that momentum phase on the small triggers. It's more likely to run. And then when you start to get to the wrong side, like if you were going to try and jump in again, it kills the party for you. I like the trade. It's a late entry, but you had every advantage. You just got paid. Nicely done. Momentum for the win. And this is pretty cool. Is this Cav? This is Cav, right? Termination, full reversal, odds favorable, and he's into the area even with that much momentum. And there's one divergence, right? He gets in at the area because the small triggers are a full bar away because it's a good top, even with that. And he gets back out where it can be trouble. I love it. Great trade. Did you pay any attention to the small triggers being a full bar away there, Cav? Or did you just get in no matter what? You typically just get in no matter what. But look at the great top. Look what started the whole move. A termination that created a reversal is what set us in the downward motion. And then, Cav, especially when you're trading into a fib, and especially when you're trading into a fib with divergence. If these are a full bar away, it gives you a much higher chance for success. If these small triggers were up here, dollars to donuts, it would just run you right over. More often than not, it'll just run you right over on the NASDAQ. So watching that trigger placement is huge. It really is. And then if you watch it enough, you'll get to the point to where you know where it's worth a shot and where it's not. Good stuff. You guys took the same trade? I think you guys did. Bad bottom. Mid-band behaving as a termination that creates a full reversal that gives me odds favorable momentum. If you missed the first one, they said, here, let me come back for you. Mid-band's a termination when the large triggers are a full bar away. So if you went long up here, shame on you. And if you went long into 3 divergences, what were you thinking? And if you decided to go at the top of the triggers, I know some of you that do this, and you fought the small triggers, guess what? You got just beat. Absolutely, Dwight, 34.5 and 13.2. But the biggest thing, guys, is if you took a trade and lost it, post it in the room. Let's talk about it. If you took a trade and won it, post it in the room. Let's make sure that you're practicing good habits so that you can repeat this over and over. To minimize your learning curve, guys, post your pictures in the room. Every trade, win, lose, or draw. If you win and the rules are wrong, you have a short-term victory but a long-term failure. How you know the difference? To be sure, you need feedback. We're here to help. Place a trade on the simulator. Participate in class. You can't lose money. You just need to know what you did right or wrong. This is part of the magic, guys. 10K, let me read your question here. 10K says, morning, can you please say a little more on how to build self-confidence? You took a great entry, walked with 100 only on ES, while the plan was to the next 21 3 fibs, and it made there exactly. 10K, do you want the easiest answer? And man, nobody likes this answer. I'm not going to lie. Nobody is a fan of what I'm about to say. Let me go back to it. So when I first started trading, the first time I went live, this is what my spreadsheet looked like. It's okay. The first time I went live, this is what my spreadsheet looked like. My picture count was maybe 5. And I didn't bother putting them in the spreadsheet because I'm going to be honest with you guys. I'm so freaking smart. I don't need to go back and study anything. I remember everything, right? Just like the rest of us. So Whiplash, I'm sorry, I called you Whiplash because I read that. 10K. I don't know what your spreadsheet looks like. Anyone in this room, I have no idea what your spreadsheet looks like. I don't know what you've done, what you haven't done. I don't know your study habits. I don't know how much time you've put into it. I don't know if you just hope and pray that it's all going to work out or not, right? But I can tell you guys right now, if your spreadsheet looks like this, 10K, you're never going to have the trust to hold those moves because you're not studying it. You're not looking at it. You're not going back and taking pictures of a market with this much momentum hitting your target. And until you do that, why would you trust it, right? Why on earth would you take my word for it? Guys, you don't know me. I'm half cocked right now. I'm pretty drunk and a little belligerent, and I yelled at the dog, and I'm probably gonna steal quarters out of the McDonald's house change jar, right? Not really, but how on earth are you going to trust something that you're not studying? So then you guys do this and you're like, well, I'm going to use the spreadsheet nonstop. And you put 4 trades in it. And you're like, I took pictures and I even showed Mark one of them. Well, I didn't show Mark the one that kicked my ass, right? I didn't show Mark this one because that would be embarrassing. The one that I did show Mark was the one that won because I did everything right and it felt good. And oh my gosh, I feel awesome. Let me show the world. And what you're doing is you are convincing yourself that losing is bad. You're convincing yourself that losing is shameful. You're convincing yourself that making mistakes is a poor decision. And guys, making mistakes is how we get better. And then you're like, hold on. I'm going to add a picture to it and this will make me smarter. And guys, by this point, you're 30 days into it. And you're like, I don't want to do this. Ron, take care, man. And you're like, oh, I don't want to take pictures. It feels like work. I couldn't figure it out, but I didn't want to ask for help. I don't know how to put it in the spreadsheet, but I didn't want to ask for help. I think I know my rules, but I'm not sure. I don't want to ask for help. And I'm going to tell you guys right now, if this is what your spreadsheet looks like, if this is what your spreadsheet looks like, if this is what your spreadsheet looks like, you're not going to build trust. If this is what your spreadsheet looks like, and let's go through, I'm going to slide it off to the side so that I can just rifle through it. Watch this. There's momentum for the win. 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 You see what I'm doing here? There's momentum for the win. Son of a bitch. Look at the bounce. Guys, I don't care what you do in life, right? It's up to you. But you have to go through and you have to build trust. So 10K, do you want to learn to hold longer? Scroll back and see how long that thing pushes with odds favorable. See how often it continues. See how often it breaks areas. See how often these areas stop the market in its freaking tracks and put it together. And what you'll find, guys, is that if you start implementing good habits, if you start saying to yourself, all right, today, every trade that I take, I'm going to put it into my spreadsheet and I'm going to study it tomorrow. And I'm sorry that I've never mentioned this in class. I'm going to study it tomorrow and I'm going to ask myself what worked and what didn't work. And I'm going to make sure that first and foremost, I can take the correct entries. And then from there, 10K, every picture that you take of the perfect entry creates an opportunity for management. So that's an ugly 50-50 trade with no divergence. And the divergence says get out. So what am I doing? I'm learning how to manage a 50-50 trade. And then if I go to the next one, when to hold. So this is the one that you need. When my small triggers are absolutely screaming outside of the large triggers and there's nothing in the way on the large chart, brother, I'm holding. But you have to have a management plan, 10K. So you have to have a plan that says if everything on the large chart is going my way, if everything on the large chart says that I'm about to win, there's only one thing that's going to take me out of this market, and that's 3 divergences. And 10K, I got to tell you, man, you are right where everybody is. It's nerve-wracking to have to manage. You have to handcuff yourself after the execution. Divergence scared you out. So show me the picture. Did your charts come back? I don't have the ES up, or I would go take a look at it. If you want 10K, direct message me to it. I'll look at it. But we did one earlier in here. And Bob laid down on the altar for us for this one. Let me see if I can find it. Well, I don't have it. I don't remember where it went. But you have to ask yourself, what changed? I'm not sure. So let's do this, 10K. We'll finish with a management lesson, guys. If you took this short right here, and let me just make it even easier for you guys, because we're only talking about management right now. So I'm going to get rid of this, and I'm going to get rid of this, and I'm going to get rid of this. And I hope that this is helpful, guys, and I think that it will be. Try not to crash my Ninja real quick. The entry doesn't matter, 10K. The entry doesn't matter. Don't even worry. I'm going to tell you not where the rules-based entry is. I'm going to tell you where you got in. Are you a NASDAQ trader? Okay, then you're in at the area of resistance inside of favorable large triggers. With all that momentum and a clear path, you're in at the area inside of favorable large triggers. So I want you to just work with me. Odds favorable, clear path. Yeah, if you have fear in your plan, the NASDAQ isn't your place. So 10K, whoops, shoot, dang. I hope this helps. So my entry, and I'm just going to say just for poops and giggles, my entry is right here. Are you comfortable with that? Everything says down, everything is strong, and my entry price is somewhere just below this fib. Don't even worry about where you'd get in. You're overthinking it. Your problem isn't entries, 10K. Your problem is management, right? So let's focus on the management lesson and not worry about the entries. Who cares? I got in 7 days back. It doesn't matter. But for shoots and grins, my stop right now is behind the reversal bar. That's it. My stop is behind the reversal bar. Comfortable? Do you have a predetermined set target? Is it a monetary number? Is it a trouble in the way number? What is it? Okay. That's where I ask you to tell me. So you're looking for 100 and 200. Okay, so let's say I'm in at 92 just to make the math easy, which means that at 87 is $100, which means that 82 is $200. So these yellow lines represent my profit targets. So far, so good. Everything's in, right? It doesn't matter. It doesn't matter. This is the best look ever. This is sexy momentum. This is ooh la la, no terms, right? You feel good about this 10K. You're like, holy crap. If I were a gambling man, I would bet on this hand every time, right? That's the only reason that you looked right to get into the trade. Can we agree on that? The only reason you're taking a trade is that the large chart says, hey, check it out, 10K. Odds favorable, clear path. Life is great. If you're not waiting for this trade, well, then you can't have arbitrary stops. You can't have arbitrary entries because it's no longer high probability. So the first thing that you have to be able to do before you do anything is decide, is it the right trade or is it the wrong trade? Is it a high probability trade or a medium probability trade? But we're going to say this is a high probability trade. It's a beautiful entry. And if it helps, we're on crude oil. So fighting these small triggers doesn't matter. My first target is at $100. When this bar prints, do I still have odds favorable and a clear path? Absolutely, right? When this bar prints, do I still have odds favorable and a clear path? Absolutely. And what else has happened? Now I'm on the correct side of the smalls. 10K, is there any reason to move a stop other than fear? Is there any reason to move a target other than fear? And I want you to answer that question. You have to ask yourself what changed. Not a thing. On this bar, your profit target was hit. There is no the plan. It has to be your plan. 10K, nothing changed. 100%. Nothing changed. You didn't get an additional divergence. You didn't get an area. You stayed on the correct side of the smalls. The first time something changes is when this reversal bar prints off of the pivot stop out. This is your first trouble spot. That's a great place to take profits. That's when it's appropriate to move stops. Until then, you've got to let this thing do its job. You've got to let this chart do what the chart does. And it's the same thing Bob did. And Bob, thank you for that. So let me show you what Bob did. And this is on the S&P. It's beautiful, isn't it? No worries. Do you see his entry? Right at resistance, right inside of the triggers. His stop keeps him safe. Everything is good. Are you with me on this one, 10K? From his entry right here to his exit right there, did anything change? The momentum is still down on the large chart, right? Everything still says down. Absolutely nothing changed. The only thing that changed is that now the trade's going in the direction of it. Now he's established his risk. Now he's in a better position. But what happens, and guys, I know that everybody does this. I do it still some days. Is I see these fluctuations right here. And I get scared, right? And I see that little uptick and I get scared. Because this chart, I'm not looking at it anymore. I'm hyper-focused on my P&L number. And if it's red, I stop reading charts and I try to preserve equity. And if it's green, I stop reading charts and I hope that it just stays green forever. And this is where having a management plan per trade comes in and pays dividends for you. So 10K, you're cool, but you got to understand, first of all, what kind of trade. If it's a high probability trend trade, the only thing that's taken me out of this trade is a second higher divergence or three divergences in the same place. If it's a 50-50 trade, one divergence might take me out of it. If it's a momentum trade, a loss of momentum. And then you have to keep it very if-then, very pragmatic, very mechanical until you develop that trust. But what happens is we all love to forego the idea of working the plan and practicing the plan and taking pictures and building confidence, and we all try to go straight for the money. I just want the money. And it's the process that yields results. And management's going to be one of the hardest parts of it, guys, because management is where you have something to lose. Well, Bob, because it was the S&P, man, you're on the right side of momentum. You're below the larger in the momentum phase, and you're taking that pullback to the synthetics. I take this one at the area all day long. Divergence gets me in a little higher, but once it gets to the other side, wild horses, right? Man, I hope so, 10K. I hope that you post more and more every day. It aggravates me if you guys suffer in silence. I want to help you guys out. I want to take care of you. I'm pretty good at this. But what you need to do is every time you take a trade, back to basics a little bit. You'll get there. 10K, I've seen your charts, man. You can read charts with the best of them. Now we just got to develop a little trust so we can eliminate a little bit of fear so you can hold for bigger moves. You'll get there. Everybody gets there. Everybody makes it difficult. 10K, I blew out a lot of accounts doing it, but can I touch on that? And I hope that you don't feel attacked. You wasted a lot of time on the NASDAQ because you're not sure how to react in a trade. And if you don't know what you're looking for and you don't know how to manage it, how on earth are you going to manage it in a market that moves this fast? That's putting unrealistic expectations on yourself. That is watching the PGA and then expecting to go shoot a 72 because you watched it without putting the work in. If you show me the charts, I'll ask for the software back. I promise that I never will. The only thing that I ever ask of you guys is that you show me where you're having trouble so I can help you fix it. That's it. Be the squeaky wheel and let me help out. But I'm going to call